This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Tom Keene out today, not to worry. Alix Steel sitting in for Tom Keene. How good is that? We got to get up a little bit earlier today. No problem.
Yeah, no problem. I mean, I used to get up at 3, so getting up at 4 is like, whatevs.
No problem at all. We got Alix Steel, no problem. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast, and that's where you're going to find us. Big day today. Lots going on here. Another big earnings week here. Another big week of economic data. We'll stay on top of that. We're going to kick off today strong. Ann Sonders, Chief Investment Strategist at Charles Schwab. She's going to join us to give us her thoughts on these markets. Jennifer Lee, BMO Capital Markets Senior Economist. We got a lot of central banks reporting around the world this week. We'll hear from them. And where are we going to go with this economy? And then in the 9 o'clock hour, one of the smarter folks we talked to about the economy, about central banks, about the marketplace, Danielle DiMartino Booth, CEO and Chief Strategist at Quill Intelligence. She'll join us here in the 9 o'clock hour. So we've got you for the next 3 hours, no problem whatsoever. Got a little bit of green on the screen here today. The S&P up about 0.3%. Let's kick everything off this morning with a Bloomberg Business Flash and Lisa Mateo.
You got it. Yeah, futures extending last week's gains. Traders focus on the prospect for the Federal Reserve to actually cut interest rates. We shall see. There's plenty of Fed speak this week. That's including John Williams, Thomas Barkin, Neil Kashkari as well. Now, the Federal Reserve, also issues quarterly reports on the health of America's banking system. Senior Loan Officer Survey. That comes out today. Later this week, we have a report on wholesale inventories, initial jobless claims, and also a read on sentiment. So right now we have NASDAQ futures down up 0.2%, Dow futures, S&P futures up 0.3%. The 2-year yield at 4.79%, that's down 2 basis points. The 10-year yield at 4.78%, that's down 3 basis points. To earnings we go. We'll start with Spirit Airlines. They're down 5%. Second quarter revenue missed estimates. And then we have Paramount, those shares up more than 3%. It's weighing Apollo and Sony's $26 billion offer to buy the company. Now, separately, Warren Buffett said Berkshire Hathaway also sold its position in Paramount at a loss. Tomorrow, big day for Apple. The company's taking the wraps off its latest iPad. Shares right now, though, they're lower before the bell, down about 0.5%. That is your Bloomberg Business Flash. Over to you, Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. If you're Warren Buffett, Alex, $189 billion in cash. I mean,
it's insane. Didn't he make like $2 billion in interest payments from treasuries or something?
Yeah.
Like, talk about T-bill and chill.
Yeah, exactly. T-bill and chill. Exactly right. I mean, you look at your 2-year treasury, 4.79%. But I mean, there's not much out there to buy. I wonder do they do a buyback at some point and just return the cash to shareholders at some point?
It feels like he's he's always actively looking, but it feels like he's actively managing this cash pile to put stuff to work, and that time may be sooner rather than later. But this is just an inference of what they talked about. But it does raise a question of kind of where do you do that? What does that wind up looking like?
I can't think of anything of size out there. I mean, the last thing they bought was a railroad company. So I don't know what you do after that, but it's just extraordinary. But I mean, the people love going out there.
You want the buyback, don't you?
I want the buyback.
He wants the buyback.
He
likes dividends. He wants the buyback.
$189 billion of cash. I mean, it's a CPI. It's a GDP story is what I think Berkshire Hathaway is. All right, Ann Sonders, she's not sitting on $189 billion of cash. She puts it to work. Ann Sonders, Chief Investment Strategist for Charles Schwab. I don't know, Ann, if you were sitting on $189 billion of cash this morning, what would you do with it?
Bill and chill. I kind of agree with that. But the real answer to that, and leaving Warren Buffett and Berkshire Hathaway aside, we also have a decent size in terms of client assets at $9.1 trillion. But the answer to asset allocation, how much to have in cash, that's obviously specific to each investor. There's no sort of blanket comment about that, but there's income and fixed income, and therein lies this story.
So therein lies the story, Liz. It's great to see you. So Liz Ann, where does that leave us then? How long does that story go on for?
Well, I think, key to the equity market is more on the longer end of the bond spectrum. You've seen this pretty tight inverse relationship between the 10-year yield and the U.S. equity market. And the really acute inverse correlation dates back to the middle part of last year when you saw the big move up in the 10-year yield from sub 4% to 5% from late July to late October. And that led to during the exact same period of time, a 10% correction in the S&P, 12% in the NASDAQ. And then, of course, yields started to move down. And the early part of that move down, it was to the benefit of equal weight. It was to the benefit of small caps. And then when you saw the yield move up from 3.8 to more recently 4.7, the first part of that was largely to the detriment of smaller cap stocks of equal weight, sort of down the spectrum. But then when you got up to the 4.7, it obviously caused some trouble for the market more broadly. Now I think we're back in that more nuanced part of the cycle where moves up and down in yields is likely to have more of a direct impact down the cap spectrum, where you have the zombie companies, the companies that are more at the mercy of what happens with yields. You've been reporting on it a lot this morning. Many of the larger companies earn more interest on their cash than they pay interest on debt. So I still think that the bond market is in large part in the driver's seat for the equity market, even more so than this parlor game of when's the Fed going to cut rates, when's the first meeting, and how quickly and how many.
Liz Ann, we're, I guess, about 80% away through the earnings for the S&P 500
Yep.
here. Any takeaways for you one way or the other?
Yeah, so the beat rate on earnings is above the long-term average, but below the average over the last 4 quarters, although the percent by which companies have beaten is decent. But it's the top line number where the beat rate has been well below long-term and shorter term. So I think the real key is the companies that have been beating on the bottom line, particularly if they haven't beaten on the top line, it's largely because of cost-cutting methods in order to protect margins. So I think that's part of the underlying story. But we are looking at about a 10% growth rate, and that excludes the big one-time charge for Bristol-Myers Squibb. It would be 2 or 3 percentage points lower than that. But since that's one company, one time in nature, I'm using more the 10% number. But we're not seeing much movement in terms of extrapolating that better than expected first quarter into the latter part of the year. So I still think the outlooks are important. And then, as has been the case in recent quarters, stocks of companies that have missed earnings are getting disproportionately hurt relative to the reward accrued to companies outperforming expectations. So it just tells you that the market's in a little bit of a skittish state.
Yeah, I mean, sometimes those drops, like I'm on the closing bell and we report earnings, and man, sometimes that punishment is an understatement. So if we like a little bit T-bill and chill, I've been trying to come up with something really clever and it's not happening. But like large and lush, like is it large caps and bust? Like is that where you have to just
I think it's,
focus?
I think where the factor focus needs to be in things like interest cover, strength of balance sheet, strong free cash flow to enterprise value, high return on equity, does tend to generally correlate up the cap spectrum. But that doesn't mean that there aren't opportunities outside of those mega cap areas. And that's why we continue to think you want to have that factor orientation around some of those characteristics that I just mentioned. I think what you really want to avoid is the ultra low quality zombie company, not profitable segment within indexes like the Russell 2000.
Liz Ann, talk to us about valuation. What's your call here? We've had a big run up off those October lows in the stock prices. Earnings, as you mentioned, have come in better than expected. Is that enough to support valuations here?
Well, last year was a year where at least at the index level, the market did quite well, but we had very little earnings growth. So most of last year was valuation expansion. The recent drawdown that we got in the S&P and the NASDAQ, and to a greater degree indexes like the Russell 2000, that was largely multiple contraction because we're now in positive earnings territory, although importantly not for the Russell. We're still in negative territory. So valuations are on the rich end of the spectrum, but as I always say, much like I say about sentiment. Valuation is a terrible market timing tool. You could talk about it as a backdrop. Markets are still fairly rich, but that is not the same thing as it's sending a message that you need to sell stocks because of rich valuation. Valuations can get rich, sentiment can get frothy, and it can stay that way for quite some time, as we all learned in the late 1990s.
Yep, absolutely. All right, Liz Ann, thank you so much for joining us. As always, Liz Ann Sonders, folks, she is the Chief Investment Strategist at Charles Schwab. We appreciate getting a few minutes of her time. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. The Israeli army has told Palestinians to begin evacuating eastern Rafah. Meanwhile, Israel is observing Holocaust Remembrance Day, Sunday evening through tonight, at an event in Jerusalem. Prime Minister Benjamin Netanyahu was among the speakers.
We know we're not alone because countless decent people around the world support our just cause. And I say to you, we will defeat our genocidal enemies. Never again is now.
However, Netanyahu adds if Israel is forced to stand alone, Israel will stand alone. Students protesting the war in Gaza left their camp at the University of Southern California without major incident after they were surrounded by police and threatened with arrest. Recent demonstrations have also taken place in New York City. New York City Mayor Eric Adams.
We want to ensure we protect democracy and the right to protest. We have an obligation that when those protests reach the point of violence, as the president stated, we have to ensure that we use a minimum amount of force to terminate what is perceived to be a threat, not only by our intelligence, but also the school and college officials.
Mayor Adams spoke on ABC's This Week, heard Sundays on Bloomberg. Representative Marjorie Taylor Greene could trigger her motion to vacate House Speaker Mike Johnson as soon as tonight. The Georgia Republican introduced a motion to vacate the Speaker's chair in March, and now she says she plans to make the motion this week. Her effort is likely to fail since House Democratic leaders say they will vote to table the motion, and many Republicans are also against Greene's effort. It is the latest scandal on Capitol Hill. Democratic Texas Congressman Henry Cuellar and his wife have been indicted on federal bribery and money laundering charges. The couple is accused of unlawful foreign influence. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Michael Barr, the business of sports. On Friday, Michael Barr, I told Alex, must watch the Kentucky Derby. It's the most exciting 2 minutes in sports. Did you watch?
Okay, so he sends me an email at like 5 p.m. on Saturday. I'm like, right, totally have to watch it. I go home and I tell my husband, okay, we have to watch it. He's like, okay, what channel is it on? I'm like, I don't know. And then we forget about it. And then I'm like, oh no. I watched the recap though.
Okay. Oh,
and I learned that there was a horse called Just Steel.
Oh,
Did you not know that? If I had known that, I definitely would have watched. I came in 17th though, but Just Steel, come on.
Photo finish, 3 horses.
Who won? I know. Was it?
Mystic Dan won. And I had Forever Young, the Japanese horse. Literally 3 horses, photo finish.
It was amazing.
Literally a nose or a nose whisker.
Well,
that was
fierceness wasn't even nearness because I'm like, what happened? Didn't even place.
Fierceness came in at like 15th.
Yeah, I'm like, what happened? My money's gone.
But it was a great. I tell you what, the Kentucky Derby is one of the best broadcasts of sport I love. I mean, the build-up, you learn about the jocks, the horses, the owners, it's all good. But it was good fun. Alex did not watch.
Just Steel.
I tried.
Next
this
year
is Bloomberg.
He did.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Call an Oppenheimer professional today. All right, stocks advancing with the S&P 500 set to extend last week's rally. Right now, S&P futures up 0.3%. Same for Dow futures. NASDAQ futures up 0.2%. Looks like traders just grown a bit more confident that the Federal Reserve will cut interest rates this year. We shall see. Over to the bond market, the 2-year yield at 4.79%, down 2 basis points. The 10-year yield at 4.48%, and that's down 2 basis points. To currencies, the yen weakened against the dollar today. Japanese, UK financial markets closed for a holiday. Over to commodities, we have spot gold higher at $2,321 an ounce, and we have Brent crude at $83 a barrel. NYMEX crude, $78 a barrel. Shares of Starbucks, well, they're up nearly 1%, and this is despite its former CEO, Howard Schultz, actually urging the chain to fix operations following its biggest sales miss in years. Some executive news. We also have sources saying Credit Suisse CEO Ulrich Körner set to leave UBS in the coming weeks, and that's after the completion of the merger. And then Jack Dorsey left the board of Blue Sky, and he actually helped fund it after the sale of Twitter to Elon Musk. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. I'm Alix Steel, in for Tom Keene. I like the early wake up. I like the second cup of coffee before 7. Okay, it is a quiet week, I have to say. It's really going to be the CPI next week that everyone's looking for. We get claims this week, we get UMISH, but we have like 11 Fed speakers over this week. So there will be stuff to pay attention to.
You know, there's the Milken Conference out in L.A. too. That's get some smart people out there as well.
They get some really smart people.
Carol Masters can be out there with Romaine Bostic doing some reporting.
And
so
also
that'd be cool.
David Weston, deals.
Nice. Okay, very
deals.
good.
I think that's the hope. Today we get, I think, two Fed speakers today. We get the SLOOS with the Fed issues Senior Loan Officer Survey, which I love because it's about bank lending standards. And we get a lot of issuance, 3, 10, 30-year this week as well. So let's help you break it all down. Jennifer Lee, senior economist over at BMO Capital Markets, joins us. All right, Jennifer, it is definitely going to be let's wait till May 15th, sure. But this week, what are you interested in?
So first of all, good morning, and thank you for having me on. And I'm very grateful. I'm not sure about everyone else. I'm very grateful that it's going to be a quiet week. I feel like, like when you have like a child who's misbehaved, not that the financial markets have misbehaved, but it's almost like, okay, go to the corner and think about what you've done. Think about what's happened over the course of this past week. Take this time. Everyone there has been so much volatility in terms of what everyone has been thinking about for the Fed. Remember at one point in March, it was like 100% priced in that they were going to cut way back in March, and look where that ended up. This is the slowdown. This is like the last week of the data. This is the slowdown that we've all been waiting for. It shouldn't be coming as a surprise to anyone, but perhaps like it was more all condensed into the last couple of days that sort of prompted more expectations that the Fed will indeed cut towards the end of the year. And as you guys were just mentioning, all the Fed speakers this week are probably going to try to hopefully sing from the same songbook or playbook or whatever, and sort of set expectations. Personally, I think not that you haven't discussed this yet, but I feel like the communications haven't been great with the Fed over the last couple of months. So it'd be a good time to sort of band together and at least drum up the same message.
Jennifer, it seems like maybe other central banks around the world might get the jump on the Fed. It looks like the ECB and the Bank of England, we might hear something from them sooner rather than later. How do you think some of the central banks, and again, the ECB and the BofA, how they might proceed going forward?
So we have been looking for, the ECB and the Bank of England to cut mid-year. The Bank of England is a bit wishy-washy on that front. It's either going to be June or August. The ECB has been, for a change, all on the same page. Even the most hawkish ones out there, particularly the one from Austria, the central banker from Austria, everyone's been basically hammering everyone on the head, basically saying, look, we are going to cut rates in June. But after that, everything's up in the air. No one has agreed on anything for July. But I think at this point, it's no longer a story about, everyone's going to wait for the Fed. All countries are dealing with their own different issues, the ECB for one, and the Bank of England, of course. So we expect them fully to cut rates before the Fed will get off the sidelines.
Jennifer, I think that is such an important point that you just made in terms of the ECB, that they are going to cut. They've really forecasted June, but they don't know what to do after that. Versus the Fed, where the question is when they start cutting. But once they start, we're pretty sure they're going to cut by 25 for a certain amount of time. Those feel like very different ways of operating.
They are, and the Fed has the benefit of having the most resilient economy out there. Even right now, again, 175,000 jobs is still nothing that's to shrug off. It's still a pretty solid number. Just it was just below expectations. But U.S. economy is still very resilient. It's still fighting with sticky inflation that we all have heard countless times about, and this is why the Fed has been holding off again and again, and we don't expect them to start cutting until September and then following up again in December. But for the ECB, aside from a couple of actually interesting services PMI numbers that were revised higher this morning, a big contrast from what we're seeing in the U.S. Yeah. But their inflation numbers have come down considerably, and on the core front as well. They were waiting for wages and to see how they were panning out. And so far, it looks like wage expectations have been tamped down a lot as well in across Europe. So this is sort of paving the way for that first cut. But again, I don't think it's going to be a series of cuts. They're still very aware of what's happening in the U.S. As President Lagarde said, we're not Fed dependent, we are data dependent, but at the same time, whatever happens in the U.S. will make its way across the ocean to Europe, and it will show up in their forecast at some point. So, they're very aware of the currency impact as well. So again, one cut, almost as a show to say, we're still very independent, but at the same time, all eyes are going to remain on Fed Chair Powell and the rest of the committee.
So, Jennifer, you're the senior economist at BMO Capital Markets, and for those that don't know, BMO is Bank of Montreal. So give us a sense of how the Canadian economy is doing. How are our friends up in Canada doing these days?
So we have the benefit of having the U.S. as our biggest trading partner. So when the U.S. does well, we benefit from that as well. But we've had a very choppy start to the year. We had a very strong January, February, and a flattish March. And it looks like April is going to be a little bit on the flat side as well. Sort of imitating, by the way, I noticed what's happening in China as well. China had a very strong January, February, and a weak end to the quarter. So, things have started to slow down. Momentum has definitely cooled somewhat. So we as well are looking for, the Bank of Canada to cut rates ahead of the Fed and more often from the Fed. We're looking also for a June rate cut. A lot of this is going to depend on the inflation readings that are going to be coming out soon. But we're looking for 3 rate cuts from the Bank of Canada in June, September, and December.
Jennifer, did you watch the Kentucky Derby?
I did not. I would have also put my money on Just Steel as well.
Thank you. And I appreciate that you say that. That means a lot. All right, Jennifer Lee, senior economist over at BMO Capital Markets. Thank you very much. Appreciate that. See, someone else didn't watch.
I don't know. It's just a great. Again, they say it's the most exciting 2 minutes in sports. And again, there's stories around the owners, the trainers, the jocks for each horse. How they got there, because it's the pinnacle of third. I only watch 3 races a year, the Triple Crown, but somehow I buy into it.
So there was a sarcastic meme my husband showed it to me, and it was like what the Kentucky Derby means for horses.
Oh, right.
And it was Squid Games.
Yes, exactly.
I was like, oh, that hurts. That's not good. Anyway, but it was great to get your email. Maybe next year I'll listen to you.
Okay.
We'll definitely see how that goes. You know what we also have today that we haven't talked about, by the way? Speaking of cool things.
Yeah.
We have a space launch. Did you know that?
I did not know that.
Yeah. Boeing and NASA are going to proceed with plans for Starliner's first crewed launch. They're taking 2 people up to the International Space Station. This has been a long time coming for Boeing.
Oh, okay. Very good.
Talking about stuff to watch.
Are we sending? Usually we send Ed Ludlow out to the desert somewhere to watch these launches. Are we doing that today?
I think this is in Florida.
Okay.
To be honest, but I don't know. Isn't that cool?
Yeah, that's very good. I mean, space stuff, we're still going. I mean, I grew up with the NASA program and all that kind of stuff, the Apollo missions, but now it's privatized.
There's hope for you because the 2 people going up there are 58 and 61.
Nice.
So Paul, there's a chance.
That's my demo. That's my demo.
You 2 can make it to space.
All right, S&P 500 up about 0.3% here. The Nasdaq up about 0.25%. Yields come in just slightly. We've got the 10-year Treasury off about 3 basis points, 4.47%. WTI crude oil for Alix up slightly, but just under $79 per barrel. I'm going to call out Bitcoin because Tom's not here. It's up about 0.6%, 64,000 on your cryptocurrency. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lise Mateo. Futures advancing in a week with a pretty light U.S. economic calendar. The market's direction could come from central bank officials. There's a ton of Fed speak on tap. Let's get to NASDAQ futures up 0.2%, Dow and S&P futures up 0.3%. The 2-year yield at 4.79%, that's down 2 basis points. The 10-year yield at 4.48%, and that's down 2 basis points. All right, we'll take you over to Paramount. Shares up more than 3%, weighing Apollo Mazzoni's $26 billion offer to buy the company. Now, on a side note, Warren Buffett said Berkshire Hathaway also sold its position in Paramount at a loss. Buffett also speaking about Apple, down 0.5%. Now, the stock is going to remain Berkshire's top holding despite selling off a big chunk of it. tomorrow. Big day for Apple. The company unveils its latest iPads. Those shares down about 0.5%. And Alex, you said you may need that extra cup of coffee, okay?
Mm-hmm.
Coffee
Always.
prices continuing to rise. Robusta coffee prices have climbed to the highest level in 45 years because of a supply crunch. That is your Bloomberg Business Flash. Back to you.
I think that supply crunch is out of like Africa somewhere.
Yes.
As I read it.
And weather.
Yeah, weather from, okay.
Did you guys read the Journal article over the weekend about synthetic coffee?
No.
Ooh, yeah. That basically.
Sanka?
No, Starbucks
okay.
has to come up with synthetic coffee.
Really?
They're, I have to experiment with different kinds and how it tastes, and you may not get the bitterness necessarily, but it has like maybe a little cumin in it and other types of beans.
Really?
And yeah.
You're a
Okay,
coffee
I like
drinker.
that.
Oh, yes.
Lisa, you?
Yes.
Yes?
How do you come in at 3 a.m.?
But you're the one who puts all this
4 a.m.
crazy stuff in your body and working out at all crazy stuff. I didn't know.
Yeah, we just learned that Paul doesn't do coffee, but he did have a latte this morning, so
Yeah.
we'll see. But I don't understand. You're an investment banker, weren't you like supposed to live on coffee?
Coca-Cola.
Oh, the
Go-to.
soda route.
So when I went over to London in '87, they had Coke for us, but that was a challenge. No ice. It took them like a week to find ice for us, for the Americans over in 1987.
So you were drinking warm Coke in the morning?
It's just
gosh.
barbarians over there.
Should have gone for the coffee then.
Exactly. All right, let's get to these markets. S&P futures up about 0.3%. David Katz joins us, President and Chief Investment Officer, Matrix Asset Advisors. David, we've had this equity market rally, 22, 23% off of those October lows here. I mean, where do we go from here? Do we just kind of stick with some of the big cap names that have worked so well, the AI names, the tech names, or do we try to get a little creative out there?
Well, two things. We think the market's going to enter a trading range for the short term. That's really happened since April 1st. You're going to have some volatility, probably about 3 to 7% on the downside and maybe 5% on the upside. In terms of your question about where to focus on the market, we've seen the market start to broaden out. So last year was the year of the mega cap, Magnificent Seven. That's broadened out in a very meaningful way. A number of those Magnificent Seven are not doing nearly as well this year. We think you're going to continue to have rotations. We look for some things that lagged last year, expecting them to do better this year. We would not chase the 2023 winners.
You wouldn't shake the winners. Are there losers, though, that you want to be buying now if valuation's in the right place, hoping they become winners?
Unfortunately, there are plenty of losers, and we think that a number of them are going to be very good investments. So our focus would be on good businesses with good intermediate and long-term prospects whose stocks have been beaten up over the short term. In terms of sectors, healthcare has been a fairly significant underperformer in the last year. We like that here. We like industrials, we like financials, we like some media companies. So a broad array of companies focus on good businesses, good long-term prospects at very attractive valuations.
Hey, David, I see on your list, one of the names that's near and dear to my heart, followed it for a long time, is Comcast. What's the call there in Comcast? Because, media stocks, they're trying to find their footing here in a world that's, kind of moving to the streaming world.
Well, media stocks have been absolutely miserable, and Comcast business has done quite well, but the stock has done poorly. The stock has done poorly because of their loss of subscribers and the fear that Verizon is going to be able to compete with them on the fixed wireless. So they are losing subscribers for actually the internet connections. Having said that, they're able to manage the business very well. They're very smart management. They're very shareholder oriented. They're buying back a boatload of stock. Yet the stock sells at about 9 times earnings and pays over a 3.2% yield. So we think if you look at this on a multi-year basis, you're getting a very good business at a great price. They're being thrown out, baby with the bathwater in terms of media companies, but their business, their actual earnings and their cash flow is much better than everybody that's out there. And we think at some point investors are going to start to realize that again.
You also like FedEx. The stock trading at about $260 right now. It's had an interesting year. It had a nice run up in March, and we kind of erased a good portion of those wins. What do you like about FedEx?
So we like the fact that management, after years of just running the company for volume, is now running the company for efficiency and earnings and cash flow. They've got a new management team in there. We think they're going to be successful. About 2 years ago, they had a lot of logistics problems. They didn't have enough labor force. Now they're laying off people. They're cutting costs very significantly. We think they're a long-term leader and survivor, and yet they sell at about 14.5 times earnings. And with the focus focus on earnings. We think they're going to do much better. They'll get a lot more credit from the street. And unlike UPS, they're less vulnerable to Amazon because they left Amazon and are not really delivering Amazon about 3 or 4 years ago. So their business is a little bit more protected, very good price, focus on earnings, all good things.
So, David, how do you think about dividends? How important are dividends to your investment outlook when looking at individual names?
We think dividends can be a very good thing. In choppy markets, dividend stocks tend to hold up better. In good markets, they participate. The last year, dividend stocks did particularly poorly. They were basically left in the dust. The S&P 500, led by the Magnificent Seven, was up about 26%. Dividend stocks were up like 5 to 9%. We think therein lies a terrific opportunity. And going back to our original thesis that you want to chase or you want to buy some of last year's laggards, we think dividend stocks in aggregate are a great opportunity here. We think after a very good decade of above average returns, the overall stock market's going to regress to the mean, probably 9.5, 10% returns. And in that environment, dividend stocks and dividends are going to be very important. So we would look to buy a number of those companies. We think there's some great opportunities there.
Paul likes this answer.
Yeah.
Yeah, he does.
Sure.
He very much likes the dividend and slash buyback answer. Walk us through some of the other stuff you like. So what I like about your stock picks that you gave us is it runs the gamut. It's hard to get a macro read from it, which I like, because it has all different kinds of sectors. And one of them that is super interesting, talking about gross dividend yield, almost 5%, is U.S. Bank Corp. Walk me through why you like this stock and kind of like why now.
So the banks have never really gotten great multiples since the 08-09 banking crisis, but the earnings and the businesses have been pretty good. Last year, they came under a lot of pressure with the Silicon Valley Bank failure. But what's happened is the banks have actually done quite well in terms of their businesses. The stocks have had a stealth rally since last April or May. U.S. Bancorp has participated in it, but we think it has a lot more to go. Their balance sheet is vastly better than it was a year ago. They're a very diversified bank. They have operations and mutual fund businesses, trust businesses that complement their banking business. The stock is at 10, 11 times earnings, as you mentioned, pays that very good yield, which is absolutely safe and will be growing. We think management is focused on doing a better job. And if the Fed starts to lower rates, but at a modest pace, that should be a very good environment for them. If the Fed keeps rates up here, they're still making a great deal of money. So this is a company that is a good business, but it's simply too cheap. We like a lot of banks here, but this probably is one of the more attractively priced one with very good financials.
Alix, one of my first jobs on Wall Street way back in the day was covering the railroad and trucking stocks.
Love that.
I mean, it was awesome. Union Pacific Railroad, the big Western railroad there. That's on your list. I love UNP. The stock's kind of flattish this year. Is this simply a play on where the U.S. economy is going?
It's a play on a few things. The U.S. economy doing better ultimately would be a very good thing for them. About 6 to 9 months ago, they brought in a new CEO who had been working with the company for years, who Wall Street really likes. And when you hear him on the conference calls, when you speak with him, he's a really focused, results-oriented CEO. So we've got tremendous confidence in him. So it's a play on new management, fixing the business. They're running more efficiently. They just had a better than expected quarter with a good outlook in a fairly dismal environment for shipping. So when shipping gets better, we think the company is really well positioned to do better. In the meantime, you're getting a fairly decent yield, and we think the stock easily has 15 to 20% upside that you'll get either through management's efforts and or an improving economy.
All right, David Katz, thank you so much. We appreciate that. David Katz, he's president and CIO of Matrix Asset Advisors. So I'm looking at WTI crude oil just below $79 a barrel. Why is nat gas completely on its back? Don't people like natural gas?
Okay. Let me flex my hands here. So a big issue is natural gas reflects gas prices here in the U.S., and that's because there's a lot of it. I mean, whether you are a natural gas producer, there's a lot, or if you're an oil producer, gas also comes out. There also isn't an open door to exporting all that LNG. It takes a long time to get those facilities. You need liquefaction because you need to make it really cold in order to get the natural gas to be shipped. And you don't have the infrastructure in the way that we need. So you're just having a glut.
Why can't we build
US.
a natural gas thing on the Gulf Coast?
You can, and there are ones that have been built, and there are new ones that will be built, and there are a lot of them coming. However, we did have the Biden administration put a moratorium on new natural gas export facilities. The thinking is that that's just political and that will go away in time, but it can take years years and years to get these things up and running.
I think we need to get out to the Gulf Coast and take a look at that whole thing.
Oh, okay.
Let's do that.
Okay.
In the meantime, with our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. The Israeli army is ordering tens of thousands of Palestinians in Gaza's southern city of Rafah to start evacuating from the area, signaling that a long-promised ground invasion there could be imminent. The announcement complicates last-ditch efforts by international mediators to broker a ceasefire. We get more from Bloomberg's Ethan Bronner.
There are talks in Cairo that are stalled. I mean, the stalling is always over the same point, which is Hamas wants a guarantee that there will be an end to this war, and Israel wants a deal which does not involve a promise to end the war because it believes it needs to destroy Hamas for it to feel safe in the future. So, but of course it wants to get its hostages back.
Bloomberg's Ethan Bronner. The order to evacuate from Rafah comes after Hamas killed 3 Israeli soldiers with a rocket barrage on Sunday. French President Emmanuel Macron has welcomed China's Xi Jinping for a 2-day state visit to France. The leaders discussed trade issues in a meeting with European Commission President Ursula von der Leyen. Macron recently denounced trade practices of both China and the U.S. as shoring up protections and subsidies, while Europe's industry remains open and is stuck in overregulation. Macron also seeks to press Xi to use his influence on Moscow to move toward ending the war in Ukraine. NASA is getting ready for a first tonight as it launches Boeing Starliner. Boeing spacecraft is set to launch with humans on board and dock at the International Space Station for the first time. Now, the 2 astronauts who will be on board are test pilots. While SpaceX has sent its Dragon capsule to space with humans a dozen times, never before has Boeing Starliner carried humans to space. NASA Administrator Bill Nelson told ABC he'll be white-knuckling it tonight.
Remember, this is a test. This is not your normal Dragon launch.
Nelson went to space himself on the shuttle in 1986. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Alex, this Milken conference looks pretty cool, but I'm looking at the Bloomberg reporting here. Elon Musk will take time from contending with mounting challenges at Tesla to be interviewed by host Michael Milken, the 1980s era junk bond king turned philanthropist. That should be a pretty interesting discussion.
Looking forward to that, particularly, did you see his tweet on Buffett? So he tweeted that, hey, if Warren Buffett's looking at what to do with that $189 billion worth of cash, come invest in Tesla.
Very good.
He also said it on X. I don't know.
All right.
I enjoyed that.
A lot of players there. Ken Griffin, CEO, Citigroup CEO Jane Fraser, Wells Fargo CEO Charles Schwab, Bill Ackman. He's going to address attendees at an invite-only discussion on the diversity, equity, and inclusion movement, which he's got some very strong opinions about looking at his social media. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing. We have S&P Dow futures up 0.3%. At NASDAQ futures up 0.2%. To the bond market, the 2-year yield at 4.79%. That's down 1 basis point. The 10-year yield at 4.48%. That's down 2 basis points. Over to commodities, we have spot gold higher at $2,316 an ounce. We have Brent crude at $83 a barrel. NYMEX crude at $78 a barrel. I want to point out Bitcoin up about 0.5% at 64,145. Well, we have a rebound in the U.S. meat industry. Tyson Foods actually raised its 2024 earnings outlook after posting second quarter profits that beat estimates. Those shares are up about 2%. And sources saying Chinese driving firm Beijing Moneta Technology, well, it's filed confidentially for an IPO in the U.S. It could raise between $200 and $300 million from that share sale. And meanwhile, you have self-driving company Luminar laying off 20% of its workforce, or about 140 workers. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate it. Alix Steel sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. All right, so we've established you did not watch the Derby.
Correct.
Is your household, do you watch any sports in your household?
No.
Really?
Yeah. I mean, we watched the Super Bowl. That's it. Tennis. My husband likes tennis.
Your husband likes tennis. Okay. Yeah. Growing in my household when my kids were younger, no sports. No interest. 0 for 4.
Really?
Yeah.
Even though you like sports.
Exactly. So I would be sitting there by myself watching the Super Bowl.
I mean, if someone in my household cared about sports, I would watch it with them, but no one seems to care. My dad watches golf, boring.
So I can hang with your dad.
As all hell for me. So he's
well, my kids were little. I put my kids watching golf because it was so calming.
And then they'd
pastoral. Nap? Yeah, exactly.
Need to get to sleep. Let's put on golf for you.
But the sports leagues spend billions. Lisa, does your household watch sports?
Yeah, we do. We're big, like Yankees, Knicks, like we're on it.
We'll watch the World Series.
Yeah.
I think we're just fickle sports people. Like when something fancy happens or a big deal happens, we'll watch it, but otherwise...
All right.
I think it's because like my kids are like into sports, like the family, like they play sports, they're into like the whole thing.
Right.
So
I tried my best.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, folks, your daily look at the front pages around the world brought to you by Interactive Brokers. Interactive Brokers charges U.S. dollar margin loan rates from 5.83% to 6.83%. Rates subject to change. Learn more at ibkr.com/compare. Lisa Mateo, what do you got for us today?
All right. It was something we were talking about earlier. You mentioned it too, Alex. The Boeing spacecraft set to carry the astronauts for the first time tonight. So it's the Starliner blasting off 10:34 p.m. Eastern from Florida. 2 astronauts to the International Space Station. They're going to return them to Earth about a week after, but it's really going to test whether it's ready to handle like these NASA missions. But it's been a struggle. The project led to a $1.4 billion accounting losses for Boeing, but it could be good news. I mean, Boeing could use some good news, right? It's facing all the safety issues with its airline business. But yeah, this is happening tonight. So
boy, if I'm an astronaut, am I a little nervous getting on a... I don't know.
I mean, I think if you're an astronaut, aren't you kind of used to these things?
True.
I mean, apparently Boeing has around $1.5 billion in extra costs to cover these Starliner delays and technical problems, and you would hope that they would all be sussed out. Also, I didn't know this, but the ULA rocket is partly owned by Boeing and Lockheed Martin. So I just thought that was really interesting, and they're both thinking about trying to like spin off that stake in this Pentagon and contractor, but it hasn't happened yet. I just found that interesting also in terms of those relationships.
My son works at Lockheed Martin, and I'm not allowed to know what he works on.
Really?
Yes, he's only 28.
So cool. He's on a need-to-know basis.
Yeah, and he tells me, you don't need to know, Dad. So I was like, okay.
Wow.
I'm sure he savors that. He savors that. Anyway,
I still pay for his phone bill, though.
Oh, that might have to stop.
I don't know. I feel like that.
And the Netflix too.
That's a little sketchy
yeah,
there.
I think we took care of the Netflix.
I'm definitely looking forward to that. That's going to be super fun just to see how that all goes. Lisa, what else are you interested in?
So this is what Paul is right up your alley with the Paramount. This is the New York Times said that since those Skydance talks ended, that a special committee, their Paramount's board of directors, they signed off to begin deal talks with Sony Pictures Entertainment, Apollo. You remember last week they bid that offer for the company around $26 billion in cash. So we'll see where this goes. You know, they if they'll push further for negotiations with Skydance too on top of this. So it's kind of opening up the bidding.
Yeah, this one feels more real to me. You've got a real strategic player in Sony. You've got a real financial player in Apollo. So you think they can come up with the money. You think they can add value there. I don't know what the regulatory environment is for putting two big studios, the Sony studio and the Paramount studio together. I'm sure there's going to be some regulatory review there. But this one feels a little bit more real. The question comes down to, will this deal result in a premium paid to Sherry Redstone and her controlling shares? That's what she wants. And will she get it in this transaction? We'll have to see.
Apparently, the Financial Times, though, reported that James Cameron and Ari Emanuel are actually backing the Skydance bid. Whether or not that actually means something material is something very different, but they both came out in favor of that.
Both players, but they're not in this realm. I think you need some seriously deep pockets like Apollo and some serious strategic value like Sony can bring.
Let's say, I wonder if Skydance would come back. I mean, sweeten the deal. Could they sweeten it even more? Who knows? Did you go to the movies this weekend? That's what I wanted to ask you guys. Did you see anything?
No, but I really wanted to see Fall Guy.
Okay, there you go. And you're not the only one who did not see it.
Fall Guy?
It's Ryan Gosling.
Ryan Gosling, yes. He plays like this action star. But it didn't do well at the box office. So it was a $125 million production, Comcast Universal Pictures. It brought in just $28.5 million domestic box office over the weekend. I mean, you thought he brought in the boost for Barbie, but it didn't do it with this one.
I will see it.
Okay.
I just didn't see it that weekend.
I
mean, you got Emily Blunt, Ryan Gosling, and Hannah Waddingham. I mean, I don't know what more you could possibly want. You get cheesy romance. You get things blowing up. This movie was literally made for Alix Steel.
Yet you did not go.
You
did not watch the Derby. What did you do this weekend? What did you do this weekend?
What did I do? I did some Pilates and I slept. What did I do on Saturday? Oh, I played skee ball. I played skee ball on Saturday with my daughter at Industry City in Brooklyn.
That's good. Okay.
Yeah, so Paul and I, we both like the skee ball. So I got a couple thousand.
We're going to get Alex down to the Jersey Shore this summer, to the boardwalk, a little skee ball. I tell you, so the question is, will any movie this summer make $1 billion in box office?
That's the thing. I mean, they said there's two big. There's Inside Out 2, which maybe you'll take your daughter, that one, and then there's also Deadpool and Wolverine.
Oh, Deadpool.
So Deadpool, I love.
Okay, guys.
Sorry,
I could talk for like hours. I mean, Deadpool and Wolverine. I will like take the day off work. Yes. I will like stay overnight. Yes. Like I will hustle to see this movie.
And who's the Deadpool guy?
He's the other Ryan.
Yeah, the other
Ryan Reynolds.
Ryan Reynolds.
Ryan Gosling, Ryan Reynolds.
Both from Canada.
Hilarious.
Both really funny.
Not for the kids.
Both funny.
Definitely.
I know. I think the rumor is that Taylor Swift is supposed to be in that. So that makes my daughter really, really, really excited to go see it. And we're like, sorry, kid. Like, there's.
Why is it R?
It's like R+.
Deadpool is like not freaking.
Really? Okay.
Imagine all the cursing and anything inappropriate is in this movie, which is why it's so good.
Very good. All right. ABC News.
Last thing. Yeah, ABC News President Kim Godwin stepping down. This was a big thing that came out Sunday night. She sent an email out to staffers. She was named president in 2021. She worked for CBS before that. They don't know who's going to take over from here on, but it was a tough role. Like it just says it was a cutthroat, toxic work environment. That's what people were saying. Good Morning America ratings kind of went down a bit, but it's a tough position.
All right, ABC News. I mean, it's you wonder where in the world of streaming and cord cutting and where is the investment in broadcast network news?
You tell me.
Yeah, I know. It used to be obviously the real pride and joy of a network was your news organization, whether it's CBS, ABC, NBC. But now with declining viewership due to cord cutting, what's the investment that those businesses require?
Right,
I don't know, and so that's interesting there. So.
And it's it. They just did a lot of restructuring in February, so it took a lot away of her management type.
Okay.
But this is also very difficult because you need you need the day-to-day stuff to feed the content, to feed the beast for streaming and for digital, right?
Yep.
But it can't just be that.
Right.
You need what that balance is. I don't think anyone's figured that out.
Podcast.
But
Isn't that what we're learning around?
Yeah,
the
but then
business?
it's only podcast, then something has got to give. Everyone gets a podcast, you'll dilute it.
I know, exactly. All right, Lisa Mateo with the newspapers. Thank you very much. We appreciate that. What I've been told, it's all about the podcast.
Okay.
Before there was Taylor Swift, there was Madonna.
Oh yeah. Yes. Like a Prayer is my favorite song. Yeah. That's my karaoke song.
Really?
Yeah.
All right, very good.
Back in the day when I played skee ball and karaoke.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, good Monday morning. May 6th, I was just informed this is the birthday of one Gordon Gekko, May 6th. How about that? That is news you can use. All right, coming up in this hour, we're going to check in with Damian Sassower, talk emerging markets. He's in the studio here, so we have to talk emerging markets. Jackie Bowie's going to join us as well, managing partner at Chatham, discuss the outlook for European economies and stagflation across global markets outside of the U.S. Quincy Crosby, chief global strategist at LPL Financial, on how worried traders should be about this market and this Federal Reserve. So we got a lot coming up in this hour. Bloomberg Surveillance is brought to you by Cohn Resnick Advisory Assurance Tax. Cohn Resnick can help your business quantify its financial exposure using risk-based strategies and analytics. Visit CohnResnick.com. Let's kick everything off this hour with Lisa Mateo and a Bloomberg Business Flash.
You got it. In futures extending last week's gains, traders kind of focusing on the prospect of the Federal Reserve to cut interest rates. There's plenty of Fed speak this week, including words from John Williams, Thomas Barkin, Neil Kashkari. The Federal Reserve also issues a quarterly report on the health of America's banking system. That's the Senior Loan Officer Survey today. Later this week, we have a report on wholesale inventories, initial jobless claims, and a read on sentiment. Over to futures. We have NASDAQ futures up 0.2%, Dow futures, S&P futures up 0.3%. The 2-year yield at 4.79%. That's down 1 basis point. The 10-year yield at 4.49%, and that's down 2 basis points. To earnings, let's start with Spirit Airlines, down 0.2%. Second quarter revenue missed estimates. And then we go to Paramount. We've been talking about it all morning. Shares up more than 3%. It's weighing Apollo and Sony's $26 billion offer to buy the company. On a side though, Warren Buffett said Berkshire Hathaway also sold its position in Paramount at a loss. Buffett also speaking about Apple. They're down 0.5%. The stock actually will remain Berkshire's top holding despite it selling off a big chunk of it. And tomorrow, Apple unveils its latest iPads. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene this morning. Tom will be back tomorrow. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So you can head over to youtube.com, search Bloomberg Podcast. You know, Alex, we were talking about what Warren Buffett could buy. Tom from Jersey writes in with a very good idea. Boeing.
Oh, yes. I heard this over the weekend. That's right.
It's got $110 billion market cap, so that's size. And boy, they could use the help. They could use the steadying hand. Think Goldman Sachs back in a great financial crisis, that kind of thing. That's a pretty good idea. So we'll have to see.
I mean, it is the real economy stuff, so it is the stuff that he likes.
He likes. I mean, it's like...
I don't know, though. It feels like it's a whole bunch of execution mess.
Yeah. So
That's
anyway,
not solved by just logistics.
I mean, Tom
streamlining.
from Jersey does not come up with many good ideas, so when he does, I have to highlight it. So very good. Let's talk emerging markets here. What do we buy? I've got a Federal Reserve that I think is going to cut rates at some point. I've got a U.S. economy that seems pretty strong. Why would I ever want to talk to Damian Sassower? Damian, what do you got for us here? Now, he has notes, which he doesn't need because he's been doing emerging markets for 100 years. And then he highlights the notes. Then he highlights the notes in yellow. And then he writes in the highlights his notes of the highlights.
That's what I do.
And does he actually look at said notes?
No, he doesn't look at the notes.
It just helps.
And then he tells me to go out and buy Indonesian sovereign debt. And that's
you definitely want to hear at 8 o'clock in the morning on Monday.
What do you got for us, Damian?
So I think last week, Chair Powell, he gave us 3 scenarios, and none of them really spoke to hikes. But if you listen to the presser, I mean, somebody inside the Fed is talking about hiking rates. I mean, he did not disregard that. So to me, again, that really means that the asymmetry is to rates going lower. I don't think you can get long duration here in the U.S. because, well, the curve is inverted and you get negative carry. So I think steepener still makes sense as opposed to going outright long duration here. And if you look at one year OIS here in the U.S.
1 year?
I'll explain that.
Okay.
That's
Pretend
where the 1 year yield will be. where the 1-year yield will be here, Dylan, in 1 year's time. So it struggled again to break through that point where it would price in more than, less than 2 cuts. So, again, that means you have asymmetry that, yes, indeed, the Fed is going to cut as opposed to hiking. But, Mira Shandon at JP Morgan discusses this might be a nice window here to get tactically short the dollar. I mean, the dollar's up 3.2% year to date, and that means there's only one way to get short the dollar, and that's long LATAM, high-yielding emerging market currencies, because nothing else seems to work. So, Brazil, Mexico, these are some of the countries you need to look at. We've got central bank meetings this week in Mexico and Brazil, so we're going to get a bit of a sniff as to what those countries are thinking. And so, we've got some inflation prints throughout the emerging markets, so a lot to look at in EM, but not necessarily here in the U.S.
But I feel like a weaker dollar was the weaker dollar call for like 6 to 8 months, and then it didn't materialize. Just ask Japan and China how they're feeling about that. So what is your level of conviction that we'll see at this time, which makes those bets good?
Well, you're right, Alex, and let me just correct you there. I am a dollar bull and have been and will always be. And any emerging market practitioner that I respect knows you have to be a dollar bull in order to make money in emerging markets. So, you can't really fight the tape, but the EM bears are certainly out of hibernation. Positioning, if you look at Felix Kalin at Soxen, she just turned bearish in February. Alex King at Payton and Rigel, the trend is bearish as well. But I think if you just look at, where we are here in the U.S., where we are here in the world, it's not until the 15th of this month. That's a good, 9-10 days away until we get that CPI print here in the U.S. We got some refunding here this week, $125 billion. Those refunding announcements haven't really moved the needle. And look, if you just look at fixed income, broadly speaking, it's down on the year. So, I think there is a little bit of an opportunity here for some near-term snapback.
What's the smart money that you talked to this morning? What are they doing?
So I think they're taking advantage in EM credit. Look, to go abroad, to look at EM local, it does take a different type of mindset. But if you want to stay here in U.S. dollar assets, Paul, you look at some of the divergences like investment grade EM credit, which is off 4 or 5% this year, and EM high yield up 3%. Square that peg for me. And then you've got corporates versus sovereigns. EM corporates they still seem to be a better buy here just because they've been more resilient. They're underowned. And so look.
EM corporate sovereign, is that Pemex, for example?
That's exactly.
So I'm buying
so
Pemex.
Yeah, exactly right. So
I've been buying Pemex for 20 years.
Mm-hmm. No. Look, and a lot of people are buying Pemex, and predominantly because it's such a liquid. It's really become a proxy for EM high yield, generally speaking, right? It's one of the few quasi-sovereign issuers that's in the MB, and the MB's all over the map these days, Paul. We've had some rebalancing at month end. They're adding Venezuela back. This is JP Morgan. That's the MB. They're adding Venezuela's sovereign debt back. And remember, this is the interesting thing. You've got a yield of 7.28% on average in EM dollar bonds, but you're not getting paid 7.2%, Alex, because a lot of those bonds are defaulted. Like Venezuela, they don't pay. So it's a fake number. 7.3% isn't your real return when you look at the yield for EM debt, but it's not that far off from it. You're still clipping, call it roughly 150 to 200 bips over treasuries. And so the carry's there, and that's what we like.
To be fair, he is looking at his notes a little bit. I can't tell if he's just in his thoughts or he's actually referencing them. You think it's a crutch? It's
for 99% of the guests that come in here, and I say no notes. Don't even bring them because they're just they don't work. But for him, somehow
it just has to be a thing. Yep. Talk to me about Argentina.
Yeah, no, the New York Knicks look great. We have a big game tonight. No, look, Argentina. There's not really much there to discuss. It has rallied pretty significantly this year on Malay. There really seems to be a shift in sentiment toward Argentina. It looks like they're going to get, another round of funding from the IMF. It looks like that's a good thing. But again, those bonds are not paying. So Alex, what's really there? The yields after the restructuring a few years back are 5% coupon. The debt just doesn't pay. So again, it takes me back to the New York Knicks Indiana game tonight. And look, Jalen Brunson, MVP. MVP chants raining down from the MSG rafters. It's going to be just a beautiful thing. I am not going because I can't afford it. But hopefully you're going, Paul.
All right, real quick, what do we do? What's the thinking this week on China.
Yeah, we have trade data coming out this week on China. We've got inflation data coming out Friday after the close, convenient, because as you know, China's deflation has been a big theme. I think, we're looking for another negative 2-point-something print there. So, the economy remains in deflation. It's obviously the property sector needs to recover. The PBOC is not rushing to assist the economy in any way, shape, or form because it knows the yield differential with the U.S. is at an all-time low. And so they really can't cut. They just have to stimulate fiscally, and that has its limitations, and so the economy is suffering there.
What else is interesting to you that I wouldn't normally think of?
I think, if you look at,
cool
I'll give you
that I can
something
take to the
cool.
cocktail
You're a
party.
commodity gal, Alex. I'll give you some commodity. Oil vol is low, historically so, and gold vol is high. After what we've seen, at least on the realized side over the last few months. And so, if you look at that divergence, what does that tell you about gold oil ratios and where things are? I think it tells you, one way or the other, that oil prices are either going up from here, and I'm not a fundamental guy, so I don't know, what supply demand issues are going on there. Or that gold, prices have to kind of come in a little bit, right? Or at least stabilize. So, it's one or the other. I'm looking at that a little bit. That's as cool as I get here on a Monday morning, Alex. I'm not that cool anymore. I'm 50.
That's good enough.
You're talking to the right audience here. I think that is very, very cool. Did you watch the Derby this weekend, by the way?
I did. It was a great finish. Look, it was an awesome, a nostril, right?
Yes.
It was an awesome finish. I didn't have Mystic Dan, but I played Mystic Dan at Tamarack and golf and took a little bit of money from him. Dan Weinstein, thank you for that. And so, look, what else do we have? We've got Rangers up 1-0. Yep. We've got the Knicks. We have what's we had F1 Miami, Lando Norris, winning that. It wasn't a Max Verstappen. We're just living in Max's world, but
And the Rangers, of course, in the second round won game one. Damian Sassower, thank you so much. We appreciate it. Damian Sassower, Chief Emerging Market Credit Strategist, Bloomberg Intelligence, with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. The Israeli army has ordered about 100,000 Palestinians to begin evacuating from the southern city of Rafah in Gaza. The looming ground operation in Rafah has raised global alarm, and Israelis' closest allies have warned against it. It comes as Israel is observing Holocaust Remembrance Day from Sunday through this evening at an event in Jerusalem. Prime Minister Benjamin Netanyahu was among the speakers.
I pledge here today from Jerusalem on this Holocaust Remembrance Day, if Israel is forced to stand alone, Israel will stand alone.
Russian President Vladimir Putin has ordered military drills involving tactical nuclear weapons on the eve of his inauguration for a fifth term tomorrow. Bloomberg senior reporter Henry Mayer is monitoring the situation from our newsroom in Dubai.
This comes amid certain actions by U.S. allies, which Russia has condemned as escalation and a source of major tension. Putin's spokesman specifically mentioned the idea floated by President Macron of France about sending ground forces to Ukraine.
Bloomberg's Henry Mayer reports the latest saber-rattling comes as France's president hosts Chinese President Xi Jinping. A new poll shows Black Americans' desire to vote in this year's election is down sharply compared with 4 years ago, a potentially troublesome sign for President Biden. According to a Washington Post Ipsos poll of more than 1,300 black adults, 62% say that they're absolutely certain to vote. That's down from 74% in June of 2020. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
Michael Barr, thank you so much. We appreciate it. WTI crude oil just under $79 a barrel. Are you happy with that?
Yeah, sure. Why not?
Yeah. Because the cost to produce is 40 to 50, right, for our U.S. people?
Depending on where it is, yeah.
Okay,
let's just call
so
it.
So that's a nice, profitable price.
Yeah. And also, they're going to say, who knows if this is actually true, but they're going to say it's not so much the actual level, it's just the stability. So if you're jumping all around, that's where it gets tricky.
Right.
But if you're in a range, 70 to 90,
yeah,
everyone's pretty happy about that. Maybe not the Saudis, but, because I think that their fiscal break-even is much higher. Like, we're talking 80s, 90s.
Really?
Their cost per barrel is super cheap, but when you add in the fiscal, it's a whole different story.
All right, okay, stay on top of that. WTI crude oil, just under $79 a barrel. This is...
breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen. S&P futures, Dow futures up 0.3%, NASDAQ futures up 0.2%. The 2-year yield at 4.79%, down 1 basis point. The 10-year yield at 4.49%, down 2 basis points. Over to commodities, we have spot gold higher at $2,316 an ounce. We have Brent crude at $83 a barrel, NYMEX crude at $78 a barrel. I want to point out Bitcoin up about 0.5% at $64,098. Over to Starbucks, their shares up nearly 1%, and this is despite its former CEO Howard Schultz urging the chain to fix operations following its biggest sales miss in years. And some executive news. We'll start with Credit Suisse CEO Ulrich Körner set to leave UBS in the coming weeks. That's according to sources. And Jack Dorsey left the board of Blue Sky, which he actually helped fund after the sale of Twitter to Elon Musk. That is your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, Lisa Mateo. I'm Alix Steel in for Tom Keene alongside Paul Sweeney. This is Surveillance. I love getting up early in the morning. This is actually a fun way to start my week.
Yeah,
so
absolutely.
Thanks for that.
It's
I appreciate
fun.
it. Okay, so we have lots of Fed speak out today. 2 Fed speakers, 11 this week. Those are really going to be the main event. We also have some ECB speakers talking today as well, talking about how rates will be lowered gradually over time. One is looking at 3 interest rate cuts so far this year, and again saying that the ECB is independent of Fed decisions and that the impact will be contained on the euro area. Let's get more insight into all of this. Jackie Bowie is managing partner and head of EMEA firm Chatham Financial. Jackie, do you agree with that idea that, look, the ECB can cut 3 times, the Fed can do what they want, the ECB in Europe is going to be relatively insulated, no problems?
Yeah, there certainly seems to be some transatlantic divergence in monetary policy, and that really reflects the very different economic conditions in the US versus Europe. You know, we've been talking all year about the strength of the US economy. You know, despite all those rate increases in the last 2 years, the economy's been very resilient. In the euro area, it's the opposite. The economies are extremely weak. The UK had a technical recession at the end of last year. So the divergence in monetary policy, I think, reflects those underlying economic conditions.
So, Jackie, let's start with the UK. What is the Bank of England saying these days? What does the market believe the Bank of England will do?
Well, there's certainly an expectation that a rate cut is coming early in the summer. So we have the Bank of England meeting this week. So we'll get the announcement on the 9th of May. The market is really now pricing in a hold for this meeting and the first cut to come slightly later. And I guess that's been the story all year with all the central banks where, you know, the Fed, the ECB and the Bank of England, we were all expecting these quite significant rate cuts to come. And what's happened is the timing of the first cut is getting pushed further out and the extent of the cuts being reduced down. It's the same story for the Bank of England.
But you know, come May 19th, there could be a savior in Europe that will help growth and maybe boost inflation.
What is that?
She goes by the name of Taylor Swift.
Oh, boy.
And I say that jokingly. But there was an argument that Taylor Swift's concert schedule in the U.S. last year did a tremendous amount for the economy, and many economists have actually put numbers on it. She kicks off her European tour May 9th. Do you think it's going to materially help, like services spending, really help boost growth or at least provide a floor? Joking, but serious question.
Well, interestingly, if you look at the 2 sides of the economy between the manufacturing industrial side and the services sector side, the services sector side has actually been holding up slightly better. And that's the argument as to why inflation hasn't come down quite so much across Europe, that services sector wage inflation has been slightly sticky. So if we get the Taylor Swift effect here in Europe, actually it's on the wrong side of the economy. What the European economy, especially Germany, is an improvement in the heavy industrial construction side of the economy.
So give us an update, Jackie, on Germany. We know that that's a challenging situation. They have kind of the double whammy, the exposure to Russian from the energy perspective, and then number 2, their exposure to China on the export side. Where is the German economy now, and how's the European Central Bank viewing Germany?
Yeah, so there has been some flash data just in the last few weeks, which is showing a little bit of signs of recovery, but it's very marginal. And generally, economists are still saying this isn't the start of a recovery trend. But you've hit on the exact 2 points. Germany's getting squeezed. They're very dependent on energy coming from elsewhere, Russia, pre the war, those energy prices. Now, the year-on-year increase in those prices is coming back down, but they're still quite inflated. And as you say, it's an export-led economy led by heavy industrial, the auto sector. And we could have a whole other conversation about the EV market and what's happening there, but Germany's really stuck in the middle. So you're right, the European Central Bank has a bit of a dilemma because the peripheral European economies, so Portugal, Spain, and Italy, are actually doing a bit better. Service sector, tourism, but then the biggest economy in Germany, obviously not doing quite so well. So trying to find a monetary policy stance that can fit both those scenarios is pretty challenging.
What's interesting, though, is that President Xi Jinping didn't go to Germany. So went to France and then going to Hungary, basically other countries that have a tangential tie, in essence, to Russia. Do you make anything of the fact that President Xi did not go to Germany?
I didn't read into that too much. I'm sure there might have been an underlying message there, but certainly in the London headlines this morning, it was very much all around, the Chinese-French relationship and how this could be, a bellwether for China and the rest of Europe. It seems like a bit of a leap to take it to that conclusion, but certainly that's the way it's being reported here in London too.
All right, Jackie, given that background, that central bank background across Europe, where are your clients, when you talk to them, where are they most comfortable allocating capital these days?
Well, Chatham really works much more in the private capital market. So we have a lot of clients who are heavily invested into real assets, so real estate and private equity infrastructure. There certainly is still a fairly negative view on big parts of real estate across Europe, and that's completely related to where these interest rates are. A combination of the valuation of those assets and also the cost of debt to borrow and to fund new investments. So still quite a bit of negative sentiment there. I would say that on the other side, what we would call the infrastructure assets, so that's everything that sits within renewable energy and big public sector infrastructure. That's certainly where we're seeing clients raising new capital and allocating into those alternative energy and infrastructure sectors. So anything in the public markets that also relates to that, I would say, is where capital is being allocated.
What are your clients most worried about then right now?
Refinancing debt at higher rates of interest.
And when is that going to come down? Yeah, it's a fair point. And when does that strike for them?
It will be the second half of this year. So there was a little half tongue-in-cheek phrase about in real estate that you just had to stay alive until 25, and that would mean that interest rates were coming back down and you would be able to refinance. Now that is correct. The interest rates will be lower in 2025 than they were at their peak of 23, but they're still going to be significantly higher than they were at the origination of some of those loans. So this refinancing avalanche, as it's being described, will really start to hit the second half of this year and into next year. So there's been a little bit of a delay of some of those borrowers refinancing as they wait to see what the interest rate market looks like in the second half.
All right, Jackie, thanks a lot. We really appreciate it. Thank you for your time today. Jackie Bowie, managing partner at Chatham, joining us there on Europe, the UK, what clients are worried about. We were actually talking about Torsten Slok note about Apollo.
Yep.
In part because the refinancing situation hasn't materialized in the same way that we were worried about here in the U.S., in part because either you already locked in low rates or because restructuring, they're more willing to restructure than bankrupt and default, basically, at the end of the day.
Yeah, I mean, again, you think about the U.S. economy where we have long-term mortgages, 30-year mortgages. Most of the rest of the Western world, Canada, Europe, do not have that. So they're much more exposed to rising interest rates than the U.S. And that is one of the reasons that Torsten Slok calls out for a stronger than maybe expected economy here in the U.S.
Yeah, and Kit Ju's talking about how it's really that two-speed, right? Low income gets worse, high income gets higher. And there you go. And that's where the divergence in the economy. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing. We have Dow and NASDAQ futures up 0.3%. The S&P futures up 0.4%. The 2-year yield at 4.78%. That's down 2 basis points. The 10-year yield at 4.47%. And that's down 3 basis points. Over to commodities, we have spot gold higher at $2,316 an ounce. Brent crude, $83 a barrel. NYMEX crude, $78 a barrel. Tyson Foods, their shares are up 2%. It raised its 2024 earnings outlook, posted second quarter profits, beat estimates. A big part of that was from its prepared food business. And then we have some news from Target, expanding its in-house Cat and Jack children's brand apparel line at other stores. So department store chain Hudson's Bay in Canada will now include its swim, outerwear, and shoes. Target also looking to expand that brand in Europe as well. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. You're listening to Bloomberg Surveillance. Alix Steel sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast. Economic indicators today are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit Commonwealth.com to learn more. Well, there was a period, Alex, maybe a week or so ago when this S&P 500 had drawn down, as the kids say, 4.5%, 5%. And then we've kind of rallied off of that. So was that it? Was that the pullback people were looking for?
It's possible.
I don't know. Do we kind of just move higher now?
You have $6 trillion in money market funds, albeit you're getting paid nicely to stay in those money market funds. But on a dip, is that when you reallocate?
I mean, Tom Keene in the triple all leverage cash, maybe he's happy right there. I don't know. Quincy Crosby joins us. She's not sitting in cash, I don't think. Chief Global Strategist at LPL Financial. So, Quincy, when we did see that kind of 4 to 5% drawdown in the S&P as recently as a week ago, was that the pullback that people were looking for, or where are we to move here in this equity market?
Well, no, I think actually they were looking and maybe hoping for something deeper to kind of convince themselves that it was a normal pullback, maybe even a correction, but that they could start coming back in. So, we pulled back, but the question now is, as you point out, where are we headed? And so much does depend on the earnings and the guidance. But also this week, for example, we're looking to see whether we continue to move higher based on, Apple's guidance. And Apple has a program this week. We'll see if they can climb higher on that. But we also have two auctions, a 10-year, $42 billion, and a 30-year for $25 billion. Where are they going to settle? And I think that's going to be important for the equity market.
Yeah, and Quincy, not to put too fine a point on it, but the 3-year also, we get 3 of those this week. So that's going to be quite a bit. There was a great piece out on the Bloomberg that talks about how Treasury is paying $2 million a minute for its T-bills. $2 million a minute. I mean, that was just a great statement to hear and to see, not for them, but for us. And you have to wonder with that, what is the argument for not just T-bill and chill?
Well, the argument is, if the yields start coming down, this is obviously good for equities, but you can be in treasuries because you'll get your capital appreciation. And that's the argument. This is why, for example, we look at utilities, and utilities have been climbing higher. You have to ask yourself why. Why, with the yield so high, would utilities be climbing higher? Is it that the utility market sees those yields starting to come down, and there are traders and investors starting to go in at a lower price for utilities, knowing that they're going to have that yield? Or is it possible that you're looking at the infrastructure that is going to be needed for AI and all of the communication systems that need a stronger electrical grids? Utilities typically tell us when they believe that the yields are topping. And this is going to be very interesting to see if this is what utilities are, in fact, telling us.
All right, so Quincy, a lot of cross currents out there, whether it's Fed speak, whether it's earnings. We're finishing up earnings in size kind of this week or so. Where do you feel most comfortable allocating capital these days? Again, as you mentioned, you can get a nice yield sitting at a 2-year treasury at close to 5%.
Yeah, I mean, investment grade corporates are very attractive. So we like that area. And in terms of equities, the financials have been doing very well. And they came in, they were attractive. You look at Goldman Sachs, for example, you're going to get a little bit of a yield. You look at some of the other big money center banks, you're going to get a yield. So we like the financials, and the insurance companies are offering very attractive yields. And in fact, they're the only ones that seem to raise their prices. I can tell you that much. And you've got to do it if you want to drive your car. But the fact of the matter is, there's areas within the equity market that do remain attractive. The question for us is whether or not you start to see consumer staples take over. That would be a significant tell. Because the market is always looking ahead. The market is not the S&P, is not the GDP. It looks ahead. So in order to have a balanced portfolio with equities, how about dividends? How about Coca-Cola, for example? And then on the other side of it, let's pay attention to megatech, because I'll tell you that May 22nd is going to be an incredibly important day with NVIDIA, and that could make or break the big megatech trade. Everyone asks, why are they at end of May? Why aren't they with the other guys? It's because they were a major gaming stock.
Yep.
And so they weren't with the other guys, so you got to wait. You have to have patience. But that's going to be significant what their guidance is.
I definitely thought NVIDIA was this week for days. And I was
Yep.
like, wait, what? Okay, fine. So to that point, if I don't own technology right now or big tech, if I rotate it out, what do I do now? Are there derivative plays that are better to get into? Is it just sort of buy any pullback I can get?
Well, if you're a trader, that's what you're going to do. If you're a trader, you'll be in China. You'll be trading in and out of that market, and hope you get out before the next headline hits to tell everybody to go away. But the other thing is what we're seeing. And if you look at the institutional side of the business with their requests for proposals, it is the alternative space. Managed futures. There are a host of areas within alternatives that are becoming increasingly attractive for retail investors and also for big pension funds. But overall, we see a balanced portfolio, a portfolio for equities. Again, we will be in growth, and we will also be over on value. And I have to say, too, we're watching the Russell 2000. They may be small, they may be mid-cap, but you got to say, why have they been doing so well, even on days when the big guys are in the red? And one of the reasons is that on the focus list from some of the big advisory houses, they're saying, go in and find the smaller brethren for tech, for banks, for biotech, go in there. And this is what we are seeing. Can it hold up? The question is, if Russell 2000 can hold up this week, it is a game change for the small and mid-cap guys.
Yeah, that's kind of where I wanted to go. I mean, it's tough to see. Yeah. I think a lot of folks would say you need to see a broadening out of this market for the health of this market.
Yeah.
I mean, are we starting to see that a little bit? It kind of felt like we were at the end of last year.
Well, we certainly were. And, again, we're starting to see infrastructure names. When financials can hold up, I remember when the financials were it. If you didn't have the financials doing well, it meant that the health of the whole market was negative. But now financials seem to be coming back. The question is, can they coincide with big tech? So, for example, if Apple does very well with their iPad half hour and the share price goes up, and then especially if NVIDIA does extremely well on the 22nd, are we going to see investors and traders just bail out and start moving back into the big seven? So this is the issue for the market. We have to follow what the market is telling us. And right now, what we're focused on is the market telling us to go careful, go to value and infrastructure. Are you going to go to utilities? Right now, the market is trying to make up its mind. Our view is you can have all of that in your portfolio and be balanced, including fixed income.
Yep. All right, Quincy.
Yeah.
Yeah, we're just going to leave it there because of time. We've got some news here. Quincy Crosby, she's a chief global strategist for LPL Financial. Appreciate getting a few minutes of her time. Alex, crossing the Bloomberg terminal here, some news. Robinhood received on May 4th a Wells notice from the SEC staff stating that it has made a preliminary determination to recommend an enforcement action against Robinhood Crypto on some issues regarding the Securities and Exchange Act of 1934.
Yeah, so Wells notice is basically like, we're going to bring some enforcement actions against you, and it's a warning on that. The stock was down 4%. Now it's down by about 2%. Was this expected? I'm trying to find some more details on this.
I don't know. I'm again seeing the stock down a little bit suggests that perhaps it's not. But anyway, that's coming across the Bloomberg terminal. We'll have more reporting on that coming up. Bloomberg Surveillance. It is brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. Hope for a ceasefire between Hamas and Israel are dimming, with talks ending and Israel gearing up for a new ground offensive. Israeli military officials are urging Palestinians to evacuate parts of the southern Gaza city of Rafah ahead of an expected ground offensive by Israeli forces into the city, where more than 1 million civilians have sought shelter during the war. Families of hostages are concerned such an invasion could endanger captives held in Rafah. Gil Dickman's cousin, Carmel Kat, is a hostage. Dickman called the offensive a reckless move.
We're very much afraid that the IDF entering Rafah will risk the lives not only of innocent people, not only of soldiers, but also of some hostages.
Israel and Hamas are blaming each other for the apparent impasse over ceasefire talks. After months of negotiations, lawmakers on Capitol Hill came up with a huge aviation bill. Now senators who were not involved in the talks want to see changes. Bloomberg's Amy Morris reports from Washington.
They filed dozens of amendments seeking modifications on refunds, airport flights, and pilot retirement age to legislation that would reauthorize the Federal Aviation Administration. So that puts Congress on a tight timeline, with some senators already suggesting the possibility of turning to a fourth short-term extension, but that could worsen staff shortages and slow adoption of new technologies. Airlines for America, which represents the airline industry, says these new amendments, which aren't germane to the bill, are threatening to the legislation, and the deadline to reauthorize the FAA is Friday. In Washington, Amy Morris, Bloomberg Radio.
Donald Trump's hush money trial resumes today. Last week, there was testimony about the former president's reaction to a politically damaging recording that surfaced in the final weeks of the 2016 campaign. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. So Robinhood stock lower after disclosing receipt of Wells notice with the SEC alleging securities violations. And I guess they had been, this follows a previously disclosed SEC investigation into Robinhood's cryptocurrency listings, custody of cryptocurrencies, and platform operations.
So Section 15A of the Act makes it unlawful for any broker or dealer to use emails or calls or whatever to affect any transactions if they're not registered, number one. Section 17 makes it unlawful to employ any device, scheme, or artifice to defraud, obtain money, or property by using misstatements. So if you just read between the lines, it feels like a broker fraud situation. But those are the statutes for the SEC.
Yeah, the stock has recovered here. It's only off about 0.5% right here. Had been down 4 or 5% earlier. So we'll follow up this going forward. Looking at the futures market here, about 47 minutes before the open of trading, got the S&P up 0.4%. The Nasdaq up about 1/3%. Yields they come in slightly. The 10-year Treasury's in about 4 basis points. Let's call it 4.46% on your 10-year. The 2 years, 4.78%. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen. S&P futures up 0.4%. Dow futures, NASDAQ futures up 0.3%. The 2-year yield at 4.79%, down 2 basis points. The 10-year yield at 4.47%, down 3 basis points. We'll take it to the 30-year at 4.63%, down 3 basis points. Commodities, we have spot gold higher at $2,327 an ounce, and over to oil. Brent crude $83 a barrel. NYMEX crude at $78 a barrel. We've been talking about Robinhood, so let's check in with them right now. Their shares down more than 2.5%. This is after word it received a Wells notice from the SEC staff related to its cryptocurrency listings. And we have Spirit Airlines down more than 3%. Revenue guidance second quarter fell short of expectations. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. I'm Alix Steel in for Tom Keene. Paul Sweeney also here. So we were talking about oil. Lisa just mentioned that. We want to get to our next guest, Sean O'Hara. He's president of Pacer ETFs. And I say that because one of their top ETFs here is called COWS, which is awesome. COWZ. It's about $23 billion. And it basically winds up looking at a free cash flow yield and screening for that in the Russell 1000, and a lot of that is actually oil. We're talking Valero, EOG, Marathon, the top 10 holdings for COWS. You also have Exxon in there, Diamondback, Occidental, which if you were an oil nerd like me, these are all the big guys
household
and then the
names.
medium-sized guys. Exactly, the household names. Sean joins us now. Hey, Sean, just, in general, how do you think about the crude market right now?
Well, good morning. Thanks for having me. I think what's going on in the crude market is fascinating to me. I mean, U.S. oil production is at an all-time high, and yet oil still sits at about $80 a barrel. Now, normally, when you have excess production or higher production than you did the previous year, that would be a bad sign for the price of oil. But I think what's going on is you have other parts of the world cutting back, and you still have a fairly robust economy, and so that's keeping oil prices high. And so my narrative is that the higher oil prices stay for longer or higher for longer, the higher interest rates will stay for longer because oil is a big input into the inflation story. And so the Fed isn't going to cut, or they shouldn't cut, until they get to their target, or at least feel like they're nearing their target and the momentum has switched. But what's caused a headwind in the inflation numbers is this elevated price of oil. So higher for longer on energy prices equals higher for longer on Fed policy, which then ultimately translates to higher for longer PEs might not necessarily be sustainable because those PEs are all based on the Fed cutting. With regard to the energy companies, we've been overweight those names for quite some time. It's been a really nice position in our portfolio. It's all driven on that factor or that metric that you mentioned, Alex, of free cash flow yield, which is the free cash flow a company generates divided by its enterprise value. And because oil prices have been elevated, in the same time that the oil companies have been cutting their capex, they're not necessarily going out and poking a hole in the ground with every dollar they can get their hands on. This has turned into a great advantage for that sector. They're the most profitable sector, and they trade at the biggest discount to the overall market. So we think energy perhaps might be a nice natural hedge to whether or not the Fed cuts rates and whether or not the overall market can sustain this 20 to 24 times earnings multiple.
Hey, Sean, where are you seeing funds flows across kind of your platform at Pacer ETFs?
Well, we started the year at $35 billion. We're somewhere between $43 and $45 billion. So we've had a nice year in terms of net inflows. Obviously, COWS has been a big story for us, and it's taken in a lot of money. What's really interesting is that small cap version of COWS, which the ticker is CALF, C-A-L-F, get a little baby now. That one's taken in quite a bit of money as people start to think longer term about portfolio positioning, and being underweight small caps for so long. I think people are starting to think maybe now's the time to start adding some additional small cap. We would just simply caution people that you shouldn't necessarily think about buying the broad-based small cap indexes like the S&P 600 or the Russell 2000, because somewhere around 25 to 30% of those names are not profitable. So we screen out all the non-profitable names. And then the second headwind broadly for small caps is that as interest rates have risen, most small cap, about half of all small cap debt is this floating rate debt. So every 90 days, the rate changes. It's as the Fed has raised interest rates, this is putting a bigger and bigger strain on the overall small cap market. So much so that about 30% of their EBITDA today is just used for interest finance or debt financing. And so our approach is to say two things. One, we don't buy unprofitable companies. And so that means they're not relying on debt. And two, because we have such a high free cash flow yield, we're better positioned to deal with this higher interest rate environment. So there's been a big flow there. And then somewhat of an increase in flow to some of the risk management strategies we have. I think people are starting to get a little nervous and thinking, maybe I need to have a different approach than just being long all the time. And so we have several strategies that are designed to mitigate the risk on the downside.
Let me ask you, did you follow the FTC suit against Scott Sheffield last week? So basically, on condition of Exxon buying Pioneer, and Pioneer is a Permian pure play, they approved it, but only if Scott Sheffield wasn't on the board of Exxon, because they accused him of colluding with OPEC Plus and with producers here in the U.S. of trying to manage oil prices. And there's also a civil action case pending too that accused Occidental, Scott Sheffield, I think Devon was also in on that as well, of doing something similar. And I say that because if there were fines to be paid, this could really rack up really fast if there could be proof that gasoline prices or jet fuel prices were higher because of all these conversations. What do you think of that?
It would be hard for me to believe that actually happened. I think the narrative from the White House has been that big companies are evil and they fix prices, and if they just would lower their prices. And so maybe this is just a little bit of, positioning to try to get that narrative out there. I mean, you're talking about companies that are billions and billions and billions of dollars worth of market cap. It's hard for me to believe that, there's this cabal of American oil producers that's in cahoots with the Saudis.
All right, so we've had a couple of tech names actually institute a dividend. That's probably not enough to get them in cows, is it?
Well, we don't measure dividends, so we're not looking for dividends. We look for free cash flow.
Just free cash flow, okay.
Yeah, but you can't pay dividends without free cash flow. So I would expect that the big tech names over the next several years will follow suit with those that have already started to institute a dividend. And so we think that's a good thing overall for the market. And we have a strategy that we call dividend multiplier, which essentially is designed to produce 4 times the income in terms of cash flow to the dividend of the S&P. And the way we get that is through some exposure to dividend futures. And so those dividend futures are priced as people have declared so far. And so there could be a little upside in a strategy like that because, they can only do so many things with the excess cash that they're generating. These big tech names, they haven't needed to pay dividends and haven't really desired to pay dividends because they were so focused on growing their overall business and getting to profitability. But now they've got so much cash that they probably are going to have to start thinking about distributing some of that to shareholders. So I wouldn't be surprised if over the next couple of years we saw most of the big cap tech names start to institute a dividend.
Oh, music to Paul's ears. He loves this.
Yes.
You like the AI names? Do they all fit into cows in some way, or?
No, that would be a different strategy. So we have a strategy with the ticker TRFK traffic. And so AI is about the movement and storage of data, right? And so we're not talking about traffic in cars, we're talking about traffic in data. And so AI is just the latest of these sort of transformational technologies that rely on massive computing power. And so we have a fund that owns the reach that these data center names. But what we also did then was we took apart the data centers and we said, what's inside? So it's software, it's servers, it's chips, it's switches, it's the cooling infrastructure that makes that possible. It's the electric power. And so we think there's a broader way to play AI than just own NVIDIA, which I personally own and have owned for a long, long time. And NVIDIA is in that portfolio. But it's much broader. And I think some investors today are starting to think, like, I don't want to play just one name. So how do I broaden this out? And how do I play some of the tangential themes? And so whether it's AI or streaming or the cloud or the Internet of Things, all of those things are going to require more and more computing power.
Yeah.
And that computing power is going to be provided by the names we own inside that ETF TRFK.
All right, Sean, thanks a lot. Really appreciate it. Sean O'Hara, president, joining us. Pacer ETFs, breaking down a bunch of different strategies there. I wonder when he'll have like a Swiftonomics ETF.
Yes.
I remember asking Eric Balchunas about that. Like, is there a Swift ETF thing that we can do?
Because it seems like she touches a lot of parts of just daily life.
Yeah, and Europe, she's coming your way. May 9th, she will be kicking off her European tour. my daughter desperately wants to go. Ironically, probably cheaper to go to Sweden to go see it than to go to Miami in a few more months. Just putting it out there. Tickets are a lot cheaper. Taylor Swift, May 9th.
Belong with me.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to kick it off with Aoifinn Devitt. She is the Chief Market Global Strategist over there at our good friends at Moneta. We're going to get her market call here, thinking about what's happening with earnings and with this Federal Reserve. Hugh Hendry, former founding partner at Eclectica Asset Management, will get his thoughts for gold. How about that? And then Danielle DiMartino Booth, one of our faves here. I just want to pick her brain on what she thinks these central banks are going to do around the world here, because that's clearly what the market is focused on. Bloomberg Surveillance today brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Heck of a water park there. I'm just saying. Throwing it out there.
All
Let's
right.
kick everything off here. Lisa Mateo and a Bloomberg Business Flash. Lisa.
Good morning. Yeah, stocks advancing with the S&P 500 set to extend last week's rally. Now we have S&P and Dow futures both up 0.3%, and NASDAQ futures up 0.3% as well. The 2-year yield 4.79%, down 2 basis points. The 10-year yield at 4.48%. That's down 3 basis points. We'll check in with commodities. We have spot gold higher at $2,323 an ounce. Brent crude, $83 a barrel. NYMEX crude, $78 a barrel. Want to check over to Apple. They're down 0.5%. Berkshire Hathaway reporting it's trimming its stake in the company, and that's despite Buffett praising the company. And Paramount up more than 3%, weighing Apollo and Sony's $26 billion offer to buy the company. And Disney, they report first quarter results tomorrow before the opening bell. Right now, those shares up 0.5%. That is your Bloomberg Business Flash. Paul and Alex.
Ooh, are you excited about Disney?
What's that?
Are you excited
of course,
about Disney?
absolutely.
What are you jamming on?
They got a lot of explaining to do here. I mean,
Okay.
again, I need a little bit more on the strategy for the streaming business.
Mhm.
Wouldn't kill them to give me a little bit of succession planning thought as well.
Succession time 0.30 or
yes,
whatever,
exactly,
3.0.
Exactly.
Interesting. Well, I will be very excited to get a feel
And what
for what you
movies do
think
they
on
have
this
coming up?
one.
Because they postponed a bunch of movies because of the writer's strike and the pandemic, and
Well-
so I think it's going to be back end loaded this year, and then really 2025.
Deadpool Wolverine is them, right?
I don't know. Is
Back-
that Marvel?
Yeah, it's Marvel.
Yeah.
Wasn't that Disney
there you
now?
Go. Yeah.
Yeah.
Boom, there you go.
Not that I'm not excited about that. In the meantime, we're looking at the markets. The S&P futures up by about 20 points. You're seeing yields move a little bit lower. Great article on the Bloomberg terminal talking about how if you're in T-bills, you're making $2 million a minute. And by you, I mean one, the general investor.
market.
I would love to make $2 million a minute. Here with more is Aoifinn Devitt, Chief Global Market Strategist over at Moneta. Aoifinn, T-bill and chill. When you're taking a look at Treasury paying out $2 million a minute, what do you make of that?
It's where we have been. Cash is no longer trash. It's a great place to stash money and to sit on dry powder. That has certainly been the case for the last 18 months. However, we've seen investors get a little uncertain about that, especially with the FOMO we've seen around equity markets and inflation staying high. That cash yield, remember, after inflation, what we're thinking about isn't quite as compelling, but it has put pressure on bond substitutes. So things like infrastructure, real estate, defensive stocks, they are all suffering from this. But as we can see from the rally in markets, it isn't making any dent in the desire for growth participation and some of those higher octane stocks.
You know, I saw over the weekend that out west in Tahoe, the skiers, they got like 2 or 3 feet of snow over the weekend. They're going to be skiing till like July 4th here. And that was picked up by Aoifinn. How do you equate the snowfall out west to your market call, Aoifinn?
It's funny. I always look for parallels in real life, and we've had a bit of a surprise. I love skiing. I wouldn't say I'm an expert, but I do love it. And just what they've said about I follow all the ski resorts, and they're saying as long as possible. They're staying open as long as possible, and that's that open-ended, the joy that the spring skiers see. I saw a parallel to that with some of the rhetoric from the Fed at last week's meeting that they will leave rates high essentially as long as possible. So there's going to be not much certainty in terms of the timing of rate cuts. And just like the snowpack is looking at 130% of its median, we still have inflation at 130% of its average. So it's around 3%, whereas we would hope it'd get closer to 2%. That's at least the target. So we're not there yet. Some are making hay in the ski slopes. But for the Fed, it's that open-endedness of it, which I thought didn't seem to spook markets. I thought it would. Actually, markets have been surprisingly resilient. I even thought that the jobs number on Friday not being as robust would spook markets. It seems to have had the opposite effect, and that markets seem to have taken from that the pressure on labor is going to be more subdued, that lead into the inflation point is going to be less of an issue, and then maybe we will get to that soft landing, no landing scenario that they've been thinking about. So markets just seem to be incredibly resilient. like the snow resorts right now.
Is it weird to get snow in May like that?
No, it is crazy out there. They've had some good snow. But when it snows in Tahoe, it snows huge because they get the storms right off the ocean.
Right, so that's not weird. But keeping rates this low at the data may be weird. I mean, this high, I should say, like this high versus the data, like is that weird? Is that sort of an anomaly? That financial conditions, for example, continuing to get looser. You take a look at SLOO's Senior Loan Officer Survey, and lending standards aren't as tight as they might have been other times in the cycle. Like that's weird, no?
It is. I mean, it's interesting. I think that the Fed right now is looking at the inflation number, looking at this ongoing tightening that they're doing behind the scenes by slowing their purchases and actually trying to offload part of their balance sheet. So that is a tightening measure. So they really are continuing to tighten. And as inflation falls, those interest rates will start to pinch more. And simply the fact that the longer these high rates are in effect, the more consumers and companies will be forced to refinance. So that transmission effect is going to start to bite even more. So even though they're doing nothing, it's still a pretty tight environment. And the question is, how long can consumers stick with that? And we're already feeling the cumulative effect of inflation. That hasn't gone away. We're seeing the gas price increase at the pumps and this geopolitical uncertainty that is just swirling in the background. And as the US election nears, it's going to get more and more noisy there, not only domestically, but it seems, unfortunately, internationally. So I do see quite a lot of risks there to this market resilience. But and as you said, there isn't really that loosening that look to kick off anytime soon.
Given that background, Aoifinn, where are you suggesting your clients allocate capital these days?
We're definitely more interesting to hear just about the notes from Warren Buffett about AI. And clearly this concentration in markets around AI and technology, we can't ignore that. We've never had a strict thematic approach. We've always been believers in more of a core, broad-based approach. We were encouraged by some of the sectors that rallied in the first quarter. It was pretty much across the board. We had strong performance. We're also encouraged by a suggestion that a cut in rates, when it finally does happen, will be good for mid-cap and small-cap stocks. So that should then, again, add some breadth to this rally, which has been very large-cap focused. So we're pretty keen on equities still. As before, we've always been diversifying. Right now around real estate, we're a little hesitant. We haven't seen the movement in prices to suggest we're at a bottom yet. So real estate, we'd be more hesitant. But as far as picking sectors, another thing we're exploring is around just how digital assets are maturing. We're taking a look at Bitcoin 2.0. We're still on the education phase. There's a lot to learn about how that behaves in a portfolio. But since Warren Buffett seems to think that this is a casino economy that we're in, we need to know what the odds are at that casino and to try to put a little bit of fundamental research behind the kind of red-black conundrum that investors may feel they're facing.
Which pairs to the point that Paul and I talked about Friday, that Dave & Buster's is allowing some gambling when it comes to physical stuff in their restaurants. Total side note, but nonetheless, I would put money on myself for skee ball versus Paul, but whatever. You mentioned, Aoifinn, small cap stocks, for example. If the Fed does wind up cutting, does that mean you expect that to be more of a normalization versus the economy is struggling, therefore I must cut, therefore small caps make sense?
I would think so. I mean, small caps have really been on the back foot for a long time. They've got very little attention. They've never seen that kind of rally. They would have been pinched by inflation, less pricing power, high interest rates, just generally less leverage at the bank with banks, with credit providers. The one thing that might have been good for small cap stocks recently would have been the M&A trend, which is around this just simply acquisitions by large conglomerates. They would have been trying to buy up some stocks. So a few tailwinds, but mostly headwinds. Yes, I would think that they will do well if the economy remains strong and the Fed does a normalizing rate cut. Clearly, if we're in economic woes, that will be hard for small caps. The mom and pop shop generally doesn't do well in that environment. So it's not a very high conviction call, I'll have to say, but it is relating to just a reversion to the mean, some kind of normalization as to how these sectors and cap segments perform.
Right. Aoifinn, thank you so much for joining us. Aoifinn Devitt, Chief Global Market Strategist at Moneta Group. S&P 500 up about 20 points, 0.4%. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. Columbia University said to be canceling its two main commencement ceremonies after the New York City school began suspending protesters who refused to leave their encampment in protest of the war in Gaza. Colleges across the country have become flashpoints for student protests over Gaza, with Columbia serving as a flashpoint of the unrest. The commencement ceremonies were scheduled for May 15th. Protesters tried to disrupt commencement ceremonies for Northeastern University Sunday at Boston's Fenway Park. A man waving a Palestinian flag approached the stage, but he was removed. These Northeastern graduates were asked if they support campus protests.
Absolutely, yeah. Freedom of protest. For the most part, everyone knew something was coming like that, and everyone was pretty much ready for it.
At the University of Virginia, at least 25 people were arrested over the weekend. Israel's military has told civilians to move out of parts of Rafah, a possible prelude to a long-expected attack on the Gazan city. The move comes after ceasefire talks between Hamas and Israel in Cairo over the weekend stalled. Bloomberg's Ed Baxter has more.
Israel says the attack has forced the Kerem Shalom crossing to close. The barrage from Rafah and Prime Minister Benjamin Netanyahu's comments came very quickly.
I pledge here today from Jerusalem on this Holocaust Remembrance Day, if Israel is forced to stand alone, Israel will stand alone.
And eliminate Hamas.
I say to the leaders of the world, no amount of pressure, no decision by any international forum will stop Israel from defending itself.
Ed Baxter, Bloomberg Radio.
And according to Axios, President Biden and Israel Prime Minister Netanyahu will speak later today about Rafah. NASA is getting ready for a first tonight. It will try to launch Boeing's Starliner this evening. Boeing spacecraft is set to launch with humans on board and dock at the International Space Station for the first time. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, how do you feel about, in this business of sports here, how do you feel about your New York Knickerbockers?
See, and now it depends. I am just so flippy-floppy.
Flippy-floppy.
Yeah, because
that is a technical sports term, I hear.
That's it. That's it right there. I mean, I was worried last week because when they lost in overtime, there really was no ball movement among the Knicks in that overtime.
Yep.
And, you know, they were up by 6, and then all of a sudden, ploop, it was like, what happened? And so now we go back to the technical term, flippy-floppy.
You're speaking my language.
So I'm not sure. I'm not sure about how this is going to go.
I feel good about it. I feel good about it.
Feeling good. You don't do flippy-floppy?
No, I don't do. I've been a Knicks fan since 1972, so I was like 8, and they haven't won.
Awesome.
They won in '73, and that's basically been it. I've been in the no man's land, but we'll see.
It's
this
exciting,
is a fun
though.
team.
It
Yeah.
really is exciting.
Are you going to watch, Lisa?
It's an exciting team. Well, no, because it's like a 7:30 p.m. game, and I can't be third.
Are you going to tape it and like DVR it?
We're asleep.
Folks, Lisa Mateo gets in here like 2 or 3 in the morning, so she's got a different schedule, but it'll be good stuff. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got S&P, Dow, NASDAQ futures all up 0.3%. Over to the bond market, the 2-year yield at 4.80%. That's down 1 basis point. The 10-year yield at 4.49%, and that's down 1 basis point. Over to commodities, we have spot gold higher at $2,323 an ounce. Brent crude $83 a barrel. NYMEX crude $78 a barrel. I want to point out Bitcoin down 0.3% at 63,518. Over to Boeing, they're up 0.5%. We've been talking about it. It's ahead of the launch of its Starliner spacecraft later this evening after years of delays. It's going to be carrying NASA astronauts to the International Space Station. And Spirit Airlines down 3%. Revenue guidance second quarter fell short of expectations. And finally, Robinhood. Right now, they're down 2%. And that's after being warned by regulators it may face an enforcement action tied to its cryptocurrency dealings. Robinhood says the assets on its platform are not securities. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. I'm Alix Steel, sitting in for Tom Keene, alongside Paul Sweeney. Okay, would you go into space right now?
Yes.
With Boeing?
Yes.
Yes. Okay.
Yes.
No problems.
No problem. I get on a 737 MAX like once a week. I have no
That's
concern.
True. You don't. Yeah, you don't care about that.
I have no worries about
that. But space, you would still do it.
Yeah, why not?
Lisa, would you go into space?
I definitely would. That's the coolest thing ever.
I definitely would not go into space.
You would not.
Terrified. Why? You'd have to seriously drug.
You're generally a risk-averse person.
What gave you that? What gave you that opinion?
The cash
That's so
the cash under the mattress.
Cash under the mattress, money in the money market account, and T-bills. You know.
All right, I go up there. I mean. Boeing could use a piece of good news. Let's put it that way.
They need this to go very well.
Yes, they do.
As do the two people that are actually on.
I mean, look at that stock. Stock is down 31% year to date.
Yeah.
It's got to be. I've been saying this for 4 or 5 years. At some point, the bad news has got to be over, and then you go long into this stock.
Well, and then here's the kind of thing. It's just bad headline after bad headline, and even if there are issues that happen on planes all the time, but then when it has Boeing in the headline, that's when it becomes a problem again, and you just can't escape the bad news. We just have a superstar walk into the radio studio now, you guys. A superstar. This is a moment. This is a moment. Hugh Hendry, which, if you don't know him, you should definitely follow him on Twitter. And we love it because he'll pretty much say anything that he wants.
Nice.
It's something that we definitely
Always
want.
welcome here.
Hugh Hendry is a writer, a risk taker, a thought leader on global capital markets. He founded Eclectica Asset Management. That's a hedge fund that delivered uncorrelated returns to clients for about over a decade. He resides in St. Bart's, and sometimes he'll take a plane into New York, and sometimes to London, and sometimes he'll talk to us. Hugh, how you doing?
I'll talk to you any day.
Hi,
any time.
How are you? So he used to come on all the time with that guy and I on TV. How's it going?
Really well, thank you.
Yeah.
I just flew in last night.
Excellent.
There you go.
We brought the rain for you here in New York City. Okay, T-bill and chill. We've been talking about it for the last couple hours. There was a nice article on the Terminal that talked about Treasury paying $2 million a minute when it comes to T-bills. Is this a strategy that works for you, Hugh?
It's a strategy that works for asset prices, actually, because the monetary system at its core, at its heart, has U.S. Treasuries. But it was never conceived under the scenario where the U.S. was the locomotive. It was the engine of economic growth. As we know just now, there are some local problems in China and in the Europe and elsewhere. And growth, I know the last few statistics were a little bit kind of funky, but the growth here just now is baked in. We've only spent 50% of the infrastructure, the building, the semiconductors and stuff. So it's bed in for the next 2 years. We ain't going to see inflation at 2 for 2 years. And so the carry, US rates are really, really high, and money from the rest of the world is being drawn here. Yeah, some of it's going into the chill, it's taking the chill pill in the treasuries, but it's bedding asset prices because with reflexivity, the expectation is you're going to make 15 to 20% taking risk. So everything's coming into the US. That sounds very chillific, except it has a parallel and enormous kind of feeling to like terrible times from like 1928, when again all of the world's capital was drawn and US asset prices lifted. And of course we know it's wonderful, but trees don't grow to the sky.
So I guess some people refer to that as U.S. exceptionalism from an economic perspective when you look at better growth here versus, say, Europe versus, say, China.
Yeah.
Do you buy into that exceptionalism type of argument these days?
No, I do not. I mean, it's just exceptionally rare. Again, I mean, you know, I'm a man from the past seeking the future, yeah? And we're in that kind of the state of condition that Soros described, the imperial circle, 82 to 87. Again, what happened then? We had almost like 20% raise. We were at 16 on the 10-year. We were peaked. Inflation was coming down. We're not at 16 here, but our debt levels are like 3.5 times GDP. Multiply that by the 5.5, and you're kind of 1982. And rates have peaked, elevated. Infrastructure is now coming through. Fiscal policy is finally working. Tax cuts don't work, but actually subsidizing the private sector to bring skill, to bring technology, to bring the future, and onshore it is underwriting growth. Fantastic, except the monetary order, monetary stability was never conceived of the U.S. being the locomotive.
So when you take a look at then all of that sort of leading to higher asset prices, like you said, is that what's going on with something like gold or Bitcoin? Is it more of just a rush into assets and hard assets, or is there something else going on between those two?
Okay, so so gold is not an agent of chaos. Gold is the alchemy of chaos. The world is becoming chaotic, yeah? And Bitcoin, I like to call it Bowie digital. You know, it's the digital equivalent of the alchemy of chaos. Now, why are they?
Wait, is it really? Is the digital alchemy of chaos?
I think so, yeah.
Huh, okay.
I think so. I mean, who knows? I'm making this up. I'm just in a flow state.
We like it.
But where's the chaos, okay? I mean, how many times do you mention it? You don't mention it enough. Can I just repeat? We've had an almost 40% devaluation in the Japanese yen. That's why these things are moving, because again, let me repeat, the US is not meant to be the economic locomotive. The US is not meant to be running 5.5% rates and imposing that on a fragile rest of the world. And the fragility, we can see fragility now coming through the crosses in the exchange market.
So when you listen in this fluid / chaotic world, where do you see the best opportunities these days?
Well, I mean, so everything rises until it doesn't.
Yep.
Okay? And so you have to, people say, oh my God, you're all so bearish. Not boring, but bearish.
They would never say boring to you.
Everything's lifting. Okay, everything's lifting. It's a question of how much you allocate. Okay, and I speak to kind of wealthy folk. Okay, and so I always say, well, how much should you have in risk assets? Let's start there, right? So you take your net worth. Typically, it's your house, right? And then you take off your mortgage. That's what you're worth. Okay, allocate 10%. No more than 10% of that sum. And where I am just now, because I think we're in the last blow-off, I want to be invested, but of using that parameter, I'm like 25, 30% invested. But where am I? I'm in technology stocks. I'm in Bowie Digital, Bitcoin. I'm in gold, yeah? And I'm long the dollar. And then I've always got I can't see a gun in the back of my pocket. I've always got something to protect me, yeah? I'm always like looking like different ways. And I own the leaps on the TLT. Because when the Fed's here, when rates are elevated, you know when the Fed will cut? The Fed won't cut because like they got it right. Okay, that's not what they're not in that business. The Fed will cut because something will break. And again, the yen's breaking, but you wait until something in the financial arena breaks, then you'll get cuts. And so I want TLT. I have the audacity to believe that the greatest bull market in treasuries will end with a double top in price. Price is like sitting on its ass just now, and I think it's going to rise like a phoenix. It ain't going to make a new high. But I can only own options on that just now because it is an ugly, ugly chart.
All right, Hugh, good to see you. We got to leave it there. We got the opening bell coming up in just a few minutes. Hugh Hendry, always outspoken. You can follow him on Twitter, too. Love getting you here. A former founding partner at Eclectica Asset Management, on all his thoughts on the market. Good to see you. Nice hat. He has sunglasses on in the radio studio, obviously, which we all wish we could also do. We're opening bell coming up soon. I mean, it looks like it's going to be a nice start to the week, yeah? Yeah, we got the S&P looking about 0.4 higher here on the open. NASDAQ about 1/3 of 1% here. Some more earnings coming up this week as well. Some central banks outside of the U.S. They'll also reporting. We're going to hear from Fed officials all week, it seems like, with all their stuff. Yep, and we got a little bit of it in the Treasury market. The front-end yield is down by about 1 basis point, but it seems to be equity risk on to the start of this week. This is Bloomberg.
Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Paul Sweeney and Alix Steel with your opening bell report. So it's a pretty quiet week as far as economic data is concerned. Pretty big week for Fed speak, especially today. We have words from John Williams, Thomas Barkin, Neil Kashkari. So are traders going to feel more confident that policymakers will cut interest rates this year? Let's find out as we start to get the numbers in. We'll start with the S&P. Hold up, I'm on the wrong screen. Bam, up 0.4%. Same for the Dow right now, up 0.4%. And we want to get to the NASDAQ and see how that's shaping up. Well, it's up about 0.3%. Over to the 2-year yield at 4.81%. That's little change. The 10-year yield at 4.50%, and that is little changed as well. We'll check in with commodities. We have spot gold higher at $2,325 an ounce. Brent crude, $83 a barrel. NYMEX crude, $78 a barrel. As far as currencies, we have the dollar weaker, Japanese yen weaker, euro, British pound stronger. We have Bitcoin down about 0.2% at 63,574. And at the bell, we're checking in with Apple, down nearly 0.5%. Berkshire Hathaway announced it's trimming its stake in the company, and that's despite Warren Buffett praising it. That is your Bloomberg opening bell report. Paul and Alix.
All right, very good. Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene here today. Tom will be back tomorrow. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can go over to youtube.com and search Bloomberg Podcast. As both Lisa and Alix were saying, we're going to hear from a lot of Fed folks over the next couple of days. Why? I don't know, but I guess it's that whole freedom of speech thing. So, but when we want to parse Fed speak, there's nobody better to chat with than Danielle DiMartino Booth. She's the CEO and Chief Strategist at QI Research. Danielle, as you step back here and kind of think about what we've heard from the Federal Reserve over the last, week or so, what's your key takeaway here? What are they trying to accomplish here, and what do you think they will do over the coming meetings?
So I think that the long-awaited Fed pivot really didn't arrive at all mid-December, but it did arrive last Wednesday. And I think that even with the first Fed speaker out of the gate, Austin Goolsbee, that there really was a reiteration of Powell's renewed focus on both mandates. He said for several years now, we've only been focused really on this inflation mandate, trying to get it under control. But now we have shifted to where we're really focused on both the employment and inflation mandates. By the way, he would not have had non-farm payrolls in hand on Wednesday when he was at the podium. The highest officials in the government do not receive an advance copy of very important data releases until 24 hours before they hit the headlines. So he was not speaking of any other knowledge other than some of the indicators that he flagged. Indeed.com job postings, the Conference Board, confidence in being able to get a job if you lose one.
So, Danielle, yeah, we get some Fed speakers, okay, but do I really just need to sort of chill and relax until May 15th, which is when we get the CPI data? Or what's our next catalyst after we got through last week that had a lot going on?
I don't even think it really is the CPI report. I think that I think that they wanted to communicate increased confidence that they feel that inflation is going to be coming in line enough to focus on what's happening in the labor market. That has not been the case for some time. It's interesting that you bring up Fed speak, because I cannot remember the last time that there was not a speaker immediately out of the gate. I'm talking about 8 a.m. Eastern, the Thursday morning after the Fed blackout ends, and yet it was very quiet. So I think that this is going to be a measured communication campaign.
So, Danielle, I've been seeing here out on social that you believe that we are in a recession. Why do you say that?
Well, because we have a flawless indicator that tells us that that's been the case. Ed McKelvey was the chief economist at Goldman Sachs. At the time, he had underlings by the names of Bill Dudley and Jan Hatzius, to name two. But he went back and looked at the post-war era and found that a 0.3 percentage point increase in the unemployment rate on a 3-month moving average basis from the lowest point in the prior 12 months had never failed to flag the U.S. economy being in recession. In two of the most extreme cases, we were already 3 months into recession. And that really does gel with what the Bureau of Labor Statistics, the Department of Labor reported 2 weeks ago. And that was that with revisions in hand through the third quarter of 2023, we did indeed have job losses of 192,000 in those 3 months ended September the 30th, 2023. So it looks like the McKelvey rule will indeed hold because it was first triggered in October of 2023.
Walk me through more of that, because on the surface, even with the reductions and the revisions lower for a couple months and for the jobs data, you would still make an argument that like 100,000+ job growth is really good. So where are we seeing the pitfalls? And is it really sort of a two-speed economy, right? Like the rich are getting richer, lower income, that's where you're seeing the struggle.
You could. It's just we've only got revisions through September the 30th. And we know that momentum has turned to the downside because of what corporate America has told us. My goodness, there's already been 22,000 job loss announcements in the month of May. And it's still a fairly young month. So on a seasonal level, we're seeing a major pickup. Macro Edge, follow them on Twitter if you don't. They do a bang-up job of tracking public job cut announcements. There were 115,000 in the month of April, which was seasonally higher than that of January. And again, we're about 22,000 with just a hop, skip, and a jump 4 days into May of data. So we're definitely seeing an acceleration of job cut announcements. Unlike 2023, though, we're not looking at 6 to 9 months of severance packages out of Silicon Valley. These are going to be closer to 60 to 90 days of severance that's going to be offered as these warn notices are triggered and state laws require that you give your employees 60 to 90 days.
You know, Alex, I follow Danielle on social, and I feel like I'm completely covered on that front. I don't need to follow anybody else.
I do have to say, I get the most IVs when she's on.
Oh,
people
totally.
ask me questions. I'm like, ask her about
ask
this,
her this,
ask her this, ask her that.
All right, Danielle, if in fact that's your recessionary call, if that's your concern about the job market, does that mean that your Federal Reserve is already behind the 8 ball? They should be cutting now?
Technically speaking, that would certainly be the case. We forget that it took the National Bureau of Economic Research 366 days to date the recession that began in December 2007. But it wasn't until many revisions later, we didn't know until July of 2009 that the first quarter of 2008 had printed negative. So you really do have, it's a tightrope that you have to walk in order to date these recessions, but the Fed's aware about the magnitude of the revisions that are coming in and the fact that it has to be really focused on, hey, the unemployment rate's 3.9%. Once it gets through our 4.0% end of 2024 target, we need to be focused on when that first rate cut is going to arrive, whether that be perhaps July or September. Mm-hmm. But that's the beauty of Jay Powell at the podium, right? When asked about whether the calendar was going to sway his thinking, he very apolitically said, no, we are data dependent. Every single FOMC meeting is live.
Okay, so game this out for me for a second. What sectors get hit the hardest, or what asset classes get hit the hardest if your model plays out?
Well, I would have to say anything cyclically oriented, anything consumer discretionary wise. The Federal Reserve Bank, I believe, of St. Louis came out and said, you know what, we have completely depleted that savings cushion. So anything that is dependent upon the mighty U.S. consumer is going to be in the crosshairs. And even, I would say, consumer staples to the extent that it is discretionary type of purchases, even at the grocery store. That's what we're hearing from the CEOs of major grocery chains and Walmart, is that Americans are actually buying less food and trading down to what we used to term in my past life as generic brands. So anything sensitive to the U.S. consumer, of course, the biggest determinant of inflation, right, is whether or not it's not the growth of your paycheck or lack thereof. It's whether you have a paycheck in recession.
Danielle, you're in Dallas-Fort Worth. How is the DFW market these days? It just seems like that is about as solid as it can get. Is that, in fact, the case?
well, there are more JP Morgan Chase employees here than there are where you are in New York City.
Yep.
We've been on the receiving end of quite a bit of global incoming corporate relocations, and that has been great. But we are actually seeing one of the highest office vacancy rates in the country. Our residential real estate market here is one of the weaker in the country, and we're definitely seeing job losses percolate. I tell you, when Tesla made their announcement, that was kind of a statewide rumbling that we all felt, because this was the first big major announcement that said, hey, wait a minute, maybe no state income tax is not enough, because things here had definitely normalized in terms of the cost of living. So we are seeing the layoff announcements here locally as well.
Okay, very good. Danielle, thank you so much for joining us. As always, appreciate getting a few minutes of your time. Danielle DiMartino Booth. She's a CEO, and she's a chief strategist at QI Research. Before that, she was a former advisor at the Federal Reserve Bank of Dallas. A really good view into kind of how some of these central bankers think and how they look at data. And what I like about Danielle is she will always come up with a data set that I've never heard of, never thought of, but boy, it tells a good story. So that's why we like chatting with Danielle. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Alex, and Lisa. We have breaking news about Donald Trump's hush money trial resuming today. Just a second ago, the judge ruled Trump in contempt of violating a gag order again. As for last week, there was testimony about the former president's reaction to a politically damaging Access Hollywood audio in the 2016 campaign. Of course, we will be following the latest on the violation of the gag order throughout the morning and afternoon. After weeks of turmoil on campus, Columbia University canceled its main commencement event slated for May 15th. In a statement, the New York-based school said that we will focus our resources on those school ceremonies and on keeping students respectful and running smoothly. Columbia has been rattled by escalating protests against the Israel-Hamas war. Special potential running mates for former President Trump made the rounds on the Sunday political shows after appearing at a weekend Republican donor retreat in Florida. Senator Tim Scott didn't answer directly when asked if he'd accept the results of this year's election. And North Dakota Governor Doug Burgum says he wasn't bothered by Trump's refusal to rule out political violence if he loses. More from Bloomberg's Laura Davison in Washington.
This is, a decision that isn't likely to be made for several months. Trump himself has said he'd probably make this closer to the convention, which is in mid-July. But this is going to be the kind of thing we're going to see over the next several weeks as Trump kind of continues to hold sort of an apprentice-style, competition, pitting different candidates against each other.
Bloomberg's Laura Davison. 2 weeks ago, South Dakota Governor Kristi Noem was widely considered one of the top contenders to be Trump's VP pick. But that all changed after the release of excerpts of her new book titled No Going Back. It includes lessons from her time as a governor and congresswoman, but also stories that have drawn criticism, one about her killing a hunting dog. Governor Noem blamed the news media for the criticism she has received.
The media has turned on me, and I understand that. I think that that's the part of being honest and being genuine. I think the American people want somebody who's real.
Governor Noem spoke today on CBS Mornings. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, Lisa.
All right, Michael Barr, thank you so much. I appreciate it. You shop online.
Mm-hmm. Yes,
now, here's a stat that kind of threw me. Nearly 42% of e-commerce orders last year involved stores, up about 27% from 2015. Doesn't that defeat the whole purpose? I just want to get a click and have it delivered.
I think it's a getting it faster thing. So if I bought something on my phone right now at Target and then I go pick it up on my way home, I avoid the lines in the store and the irritation in the store, but I can get it that day versus waiting 24 or 48 hours.
God forbid you wait 24 or 48 hours.
I mean,
that's where we've gotten,
You
right?
should see the holes in my daughter's shoes, okay? Like, that girl needs her shoes. I'm just saying.
E-commerce. This is Bloomberg.
And breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks starting off the new trading week in the green. We have S&P 500 up 0.5%. Same for the NASDAQ. The Dow up 0.3%. The 2-year yield at 4.81%. That's little change. The 10-year yield at 4.50%, and that is little changed as well. Taking a peek over at commodities, we have spot gold higher at $2,327 an ounce. Brent crude $83 a barrel. Want to check in with Spirit Airlines, down 8%. Posted a wider than expected first quarter loss due to bad weather, air traffic delays. And then you have Paramount. They're up about more than 4.5%, weighing Apollo and Sony's $26 billion offer to buy the company. And finally, Disney reports first quarter results tomorrow before the opening bell. Right now, shares are up 1%. That is your Bloomberg Business Flash. Paul and Alex.
All right, very good, Lisa Mateo. Thank you so much. We appreciate it. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Working on Wall Street for most of my career, non-competes, they're a thing. Garden leave is a thing. You have to take a break when you leave firm X to go to firm Y. You know, I get all that, but I think that's coming under some pressure here, getting rolled back, these non-competes here.
In contracts for media, for talent, you'd also do the same thing, non-competes, but my agent would always say, like, but don't really worry about it. Don't worry about it, like, it'll say it, but there are ways around it because no one actually wants to prevent you from working at the end of the day. I wonder if that's still true.
I don't know. Let's check in with somebody who knows this stuff. Rania Sedholm, managing partner, Sedholm Law Group. Rania, thanks so much for joining us here. Can you update us on what's happening? The Federal Trade Commission is looking at non-competes. What's the background here?
Sure. Thanks for accommodating me and letting me do this from my office, by the way. Thanks so much. Well, I think we touched upon this, I don't know, maybe several months ago. Kathy Hochul decided not to ban non-competes, but it doesn't matter anymore because the FTC has banned it nationwide with very, very few exceptions. So beginning in August 21st, non-competes are only permissible in very limited circumstances. One of those circumstances is if you buy somebody's business. If you buy someone's business, you can, ensure that that person won't compete against you for a reasonable period of time. And reasonability does vary from state to state. But in general, you can say something between like 6 months and a year is going to be deemed reasonable in most jurisdictions. And another one is if you are in some kind of adjudication right now, a lawsuit where you're trying to ensure that someone is not competing with you, you can continue in that lawsuit and you may prevail, who knows. But garden leave is still going to be permissible because technically you're paying somebody. And I think, that's kind of the point. But I think what people are not discussing is solicitation provisions where you're telling someone you cannot solicit my employees. That's kind of a non-compete in disguise, and that no longer will be permissible either.
Which is so interesting because I always found that confusing. Like, you're not forcing someone to leave and go with you to another place. So, like, what's the problem there? But so, okay, to your point, who does this hurt? Who does this help?
Well, I think that it's going to really kind of change those individuals who are in the middle. I think at the executive level, there has to be some kind of level of trust when you're hiring somebody to be your president, your CFO. I mean, pick anything with a C in front of it. And as you can still, maintain the confidentiality and the proprietary information. So they are probably going to get garden leave anyway, which is permissible, but it's all those the middle managers, like let's say VPs, director level individuals. I think this is where it's going to make a difference. Since you can no longer obligate them either with a non-solicitation of employees or a non-compete, we may see some of those jobs going abroad. We may. We may see more restrictions with access to information in the workplace as well, sort of like what companies with secret recipes do, where no one person has access to everything. Because when someone leaves, they can take their knowledge with them. And, that's always a point of contention, right? How much of this information is really yours and how much information is mine? So rather than fight about it, we may see some limited access for those people in the middle.
Hey, Rania, how widespread are non-competes? Is this even a thing here for most folks?
I think it's pretty widespread. I mean, I know in the fashion industry, there are a lot of non-competes, a lot of, again, companies with some kind of sale or manufacture of either potent potables or food, technology firms. I think it's very widely used.
I have a question, Paul, about garden leave. I don't get it. Like, I understand, like, back in the day where, maybe we didn't have technology with you, and you could be like, okay, maybe your skills will erode a little bit, but nowadays, I don't get it.
Well, I think, like, in financial services, it was, hey, you're working on a deal, an M&A trade, you leave, and you go to another firm. You could take that idea and try to poach that deal away from the original spot. Or if you're on a trading desk, you initiated a trade that maybe is proprietary to your desk. You go across the street, you could initiate the same exact trade. If you give them 6 months, maybe that becomes less of a risk. That is generally kind of the thinking behind it. So, Ronnie, does this FTC thing, what's the practical effect, do you think?
I think there are going to be a lot of lawsuits. I think there are some that are already pending. First off, it's strange that this came from the FTC. I think that some people are arguing that it's not proper that the FTC, propounded this rule. But I also think that in some industries, specifically technology, can you imagine if you are creating something new, like the first person who created a drone? It's very difficult to slice and dice what is considered confidential and proprietary versus what is regular competition. I mean, you came into the company, we're creating something brand new, and almost anything you learn, you could argue, is proprietary or confidential. But it's very difficult to actually prove that, and it costs so much money. So I can see this causing a lot of problems, especially in the technology realm. There is a lot more open source technology, but there's still a lot of proprietary technology as well. And I think people are going to make a stink about it. That's number one. Number two, I think depending on, the results of this presidential election, we can see this either hold firm or be changed.
All right, Rania, thank you so much for joining us. Rania Sedholm, managing partner of Sedholm Law Group. Back in one of my investment banking stints, we had this security that was proprietary to the firm I worked at. And to screen any company that you wanted to pitch the security to, we yet used this model that we had. And it would spit out kind of the terms and so on and so forth. The problem was the only person in the entire firm who really understood this model was this young kid.
Oh, man.
Super duper smart. And he was the only one. And he then left. And we looked around and we're like, none of us know how to work this model. How are we gonna? I mean, it actually became a problem. They had to bring the kid back and walk us through it. Under a special deal, he came back to work for a month just to institutionalize, just kind of the analytics behind, pitching this type of security. We're like, oh, that's a real thing.
Oh, I bet they learned after that.
Yeah.
They're like, no one can be that important anymore in our organization.
And what you learned as a research analyst, the research that you wrote did not belong to me as the analyst. It belonged to the firm.
But you still own your own brain. So this is what I don't understand. I understand putting on a trade or taking a deal away or literally going and taking a code and leaving it. But you have your brain, and your brain won't erode in 6 months. So your brain will still be there after that.
Yeah, they do. But again, any intellectual property you were working on at your original firm, presumably that would lose value over time. And maybe is 6 months the right amount of time? I don't know. But that's kind of where most of the industry seems to have fallen out.
That being said, if someone wants to pay me for not working for 6 months, I'm more than happy to let my brain atrophy.
Yes,
not a problem on that end.
Yeah, exactly.
So apparently I'm leaving you now. So I offered to go 5 hours straight with you, and I was told this Tim Senevic
I didn't have to be here?
You did. Colin, he said, no, you know what? Tim is so excited to do this program, Alex. You got to get out, and Tim can take over for you.
It's not often I get to hang out with Paul Sweeney.
I'm just saying, I tried to do the 5-hour radio shift with Paul Sweeney.
Well, not everybody. I mean, most people shouldn't be doing this.
That's also true. Maybe this is
probably the point.
About you, not about me.
Exactly. So
it's a good say, but Alex did.
All right, Alix Steel, thank you so much for joining us. Tom Keene will be back tomorrow. This is Bloomberg.